to share my thoughts with you on that. Got some technology going on here. And yes, my daughter is a third grade teacher at Metropolitan Arts Academy in Westminster, formerly Metz Elementary. And so I want to send out a personal thank you to all the teachers and administrators out there for what you do. The last year has been tough, and your kids are the better for your efforts. So I appreciate that very much. I want to talk about a little bit today. We've got a lot to cover. I'm hoping my goal is to not only answer some of your questions, but also let you know what the questions you should be asking so that you can put together a retirement income planning strategy for yourself as you move forward. And I don't need to say how tough the market is right now. So there's a lot of things going on, which makes this even more important today and every day moving forward. So without further ado, I'm going to start right into this, and we're going to talk about retirement income planning. And there's some basic questions. Planning for retirement income starts with three basic questions. What does your retirement mean to you? That is, what do you want and what do you expect in your retirement? Do you plan to travel, pursue a hobby, volunteer your time, or start a new career or business? It is important to consider your expectations carefully, because your retirement income plan will be designed to support the retirement lifestyle that you envision. When you do plan to retire, as we will discuss, the age at which you plan to retire can have an enormous impact on your overall retirement income situation. How long your retirement will last, in other words, how long a distribution period should you plan for? So let's spend a few moments to talk about those considerations. As we've mentioned, when you decide to retire, it can have an enormous impact on your overall retirement income situation. Let's consider early retirement, which may apply to many of you. Most of us would like to have a chance to retire early, but early retirement can have significant financial repercussions. First, when you retire early, you're giving up you're giving up your prime earning years. These are years during which you could be making a significant additions to your retirement savings. In addition, the earlier you retire, the longer the period of time that your retirement assets will need to provide for your support, and the greater risk that you will outlive your income. You can begin receiving Social Security retirement benefits as early as age 62. However, if you elect to receive those benefits at 62, your benefit may be reduced as much as 25 to 30% less than if you waited for normal retirement age between 65 and 67, depending on the year that you were born. We'll discuss Social Security in more detail later on. And the reason I bring Social Security up is many of you might have some Social Security from previous earning years, and some of you won't. But what I found in my financial planning practice, working with teachers and administrators, often partner, significant other, or spouse has access to Social Security and not para. And so how you coordinate those benefits can have big consequences. So we'll talk about that a little bit down the road here. You're not eligible for Medicare until you turn 65. So unless you'll be eligible for retiree healthcare benefits through your employer, or have coverage through a spouse's plan, or take another job that offers benefits, you want to factor in the cost of paying for insurance or healthcare and out of pocket, at least until you qualify for Medicare at the age of 65. Additionally, if you're fortunate enough to be covered by an employer pension plan, and obviously you are, you'll want to check and make sure that it won't be negatively affected by your early retirement, because the greatest accrual of benefits under pension plan generally occurs during your final years of employment. It's possible that early retirement could effectively reduce the benefits you receive. And I'm not going to steal too much of Para's thunder, because I know that they'll be talking to you at a great length a little bit later in this presentation. But I'm very familiar with the Para grids and the highest average salaries, and obviously the highest 3 years of your earning potential for most folks come at the very end of that career. So that does make a difference on the overall payout that you get once you select your Para benefit. So let's look at some options for delaying retirement. As you may suspect, delaying retirement presents certain advantages when it comes to retirement income planning. The longer you work, the longer you'll be able to continue to contribute to your retirement savings. Even if you're no longer adding to your retirement savings, delaying retirement postpones the date that you'll need to start withdrawing from your savings, and a shorter distribution could significantly enhance your savings potential to last throughout your lifetime. In addition, delaying retirement may mean that you can delay taking Social Security retirement benefits, potentially increasing your annual benefit when you do begin taking those payments. Continued employment also may mean that continued access to company sponsored health benefits. So let's look at working during retirement. Of course, if you plan to work during your retirement, it can have an impact. The obvious advantage of working during your retirement is that you'll be earning money and relying less on your retirement savings, leaving more of your savings to potentially grow for a future and helping to stretch your personal savings. In addition, full or part-time work during retirement could potentially provide access to affordable health care and benefits to part-time employees as well as full-time employees. If you do work during retirement, you'll want to make sure that you understand how your income might affect your Social Security benefits. While your earnings may increase your Social Security retirement benefits in future years, current benefits could be reduced. For example, for the years that you reach full retirement age, $1 in Social Security retirement benefits will generally be withheld for every 2 years you earn over the annual earnings limit, which this year is $19,560. Special rules do apply in the years that you do reach full financial retirement age, or full Social Security retirement age. It's also worth noting that there are a number of non-financial reasons that motivate individuals to work in retirement. For example, you may value the social interaction, the sense of accomplishment, and the structure that your new career provides, and ultimately decide that full-time or part-time work, or launching a new career, or starting your own business is the right decision for you. When it comes to retirement, how long a period should you plan for? So this is probably one of the most significant pieces that you need to entertain, because we're all living longer, and so our retirement savings needs to last that long as well. The good news is that we're living longer lives. The bad news, that generally translates into a longer period of time that you will need for retirement income to last. According to the National Center for Health Statistics, the average 65-year-old American can expect to live for another 19.4 years. And I just read a statistic that for couples that are 65 years old today, you can plan on at least one of those spouses living for 30 years. So life expectancy has increased at a steady pace over the years and is expected to continue increasing. This year was the abnormal one. I think we actually had a decrease in longevity for this 1 year. And according to the US Census Bureau, by 2030, 1 in 5 Americans will be 65 and older, which translates into 72 million people. Oops. I guess the point I want to make is that for many of us, it's not unreasonable to plan for retirement that lasts 25 years or more, which means your income savings will need to last as long as well. Every retirement income plan has to balance 3 main goals. 1, maximize your ability to enjoy retirement. That means making sure you have the financial ability to do the things that you want to do. Minimize the chance that you will outlive your money. And 3, manage the financial risk of unwelcome life events such as serious illness, the need for long-term care, or other anticipated expenditures for yourself and or your family. Once you know when your retirement will start, how long it will last, and the type of retirement lifestyle you want, it's time to estimate the amount of money that you'll need to make it all happen. A lot of people still entering, so apologize for the dinging there. First, you'll want to estimate the future retirement expenses to determine how much annual income you will need in retirement, factoring in the potential cost of healthcare and long-term care. Then you'll want to consider the major factors that will affect your retirement income plan. For example, you'll need to adjust your annual income estimate to account for inflation. You will also need to understand the potential impact on taxes and investment risk. Then you will need to consider the major factors that will affect your retirement income plan. For example, you need to adjust your annual income to estimate for inflation. I'm sorry, I'm on the wrong line here. So I'm not used to doing this on a script on the Zoom. So Let's see here. Then all fixed income sources that you expect to receive, including Social Security and any employer pension plan that you can count on. When you compare your adjusted income needs to your anticipated fixed income sources, you'll likely find that you won't have enough income to meet your goals. Closing the difference or this gap is an important part of your retirement income plan. To supplement your fixed income sources, you'll have to rely on your retirement savings. How you go about this, including the products and strategies that you consider, depends upon your current retirement assets, the amount of additional income that you'll need to generate, and the ability of you and your plan to tolerate risk. When trying to figure out how much annual income you'll need in retirement, you may be tempted to rely on some general guidelines. For example, you may hear that you should plan on needing somewhere between 60 and 90%, depending on who you are and who you're talking to, of your pre-retirement income when you retire. But using this general guideline like this one, while easy, really isn't very helpful because it doesn't take into consideration your unique circumstances, expectations, and goals. Instead of basing an income estimate on your annual income, needs or percentages of your current income, focus instead on actual expenses today and think about whether they'll stay the same, increase, decrease, or even disappear by the time you retire. While some expenses may disappear, like a mortgage or cost of transportation to and from work, new expenses may arise, like yard care services, snow removal, home maintenance, things that you might currently take care of yourself, but may not want to do in the future. Additionally, if travel or hobby activities are going to be part of your retirement, be sure to factor these costs in as well. While this may be painstaking, try to detail every potential expense that you can think of. And the one other piece I would leave with you is that what I've noticed in retirement, especially the earlier we retire, right now you're working 40 to 60, maybe even more hours a week during the school year. Think about when you're retired, you'll have that much more time to spend money. And what I found is that in early years, your retirement spending actually goes up, even above 100%. So be very careful on annualizing or estimating those expenses. And what I would always suggest is putting together a pro forma budget and taking a look at what those expenses are now and what you anticipate them to be moving forward post-retirement. So accounting for healthcare costs, one of the major expenses to consider is healthcare. Once you retire, you're likely to focus on more healthcare than ever before, and there's a greater chance that we will have a health decline. Most Americans are automatically entitled to Medicare coverage once they turn 65. When you're eligible for Medicare, you've got to make some coverage elections. For example, you'll have to decide whether you want to purchase Part B, coverage for medical care, including physician care, laboratory tests, and physical therapy. You may also want to consider joining a Medicare prescription drug plan, which is offered in your area by a private company or insurer that has been approved by Medicare. It's important to understand that Medicare won't cover all your healthcare expenses. For some types of care, you'll have to satisfy a deductible and make co-payments. That's why you need to consider purchasing a Medigap or another additional policy for that coverage. It is also important to understand that Medicare will not pay for long-term care expense needs. So, because Medicare doesn't cover long-term care, it's also important to consider the potential impact of a prolonged stay in a nursing home. Let's begin by talking about what's meant by the phrase long-term care. Long-term care refers to the ongoing services and support needed by the people suffering from a chronic healthcare condition or a disability. It's hard to face the fact that our healthcare might decline, but statistics suggest that approximately 40% of us, that's 2 out of every 5 people here today, will need long-term care during our lifetime or at some point after we reach age 65. Currently, the nationwide average annual cost of nursing home care is, and I just updated this, it's between $8,000 and $9,000 a month for a private or a semi-private room, which equates to, doing the math, looking at $96,000 to $108,000 a year. But in some cases, it's much higher. And in the future, long-term care costs will even rise even more. If it costs the rise on average of about 3% each and every year. And in 20 years, one year in a nursing home could cost in excess of $172,000. If you need it, how would you pay for this care? You might consider paying out of pocket, which means using your income, savings, investments, and assets, such as even your home, to pay for any potential long-term care costs. But paying out of pocket is truly a gamble unless you're wealthy. Many people assume Medicaid will pay for long-term care costs. You may be able to rely on Medicaid, but there's a catch. To qualify for Medicaid, your assets and income must be low enough to allow you to qualify. You will have to use up most of your savings before you even qualify for Medicaid. And aside from a small personal needs allowance, you will have to use all of your retirement income, including Social Security and any pension payments, to pay for care before Medicaid pays for anything. Another option to consider in long-term care insurance, which may be to provide a source of funds for long-term care expenses, but it doesn't ensure that you will have or won't have enough to pay for some of the long-term care costs out of pockets. Right now, the cost of insurance premiums has gone up significantly. So there are a lot of different products on the market today, and one can be selected that might be the best fit for you moving forward. The premium for this insurance will need to be factored into your retirement income planning needs because many times it can be significant. Other major factors to consider. So before we move on to talk about your retirement income sources, let's briefly review some of the factors that make retirement income planning so challenging. And I've been doing this presentation since early 2015, and it's probably more relevant today than it even was back then, especially for inflation, as we all know. First, even if you can accurately predict your retirement expenses and can calculate the exact amount of retirement income that you'll need each year, you'll have to adjust the calculations for inflation. You'll have to keep in mind to account for inflation, the effective taxes will have as well. And finally, your retirement income plan will have to balance your need for ongoing income with a level of risk that you're willing or accept or able to accept. The one thing I would tell you on inflation, I'm not sure how many of you have heard of the rule of 72, but we use it. It's a financial number that we can use to show how quickly things will double. So if you use a 3% inflation rate and you divide that into 72, you get 24 years. So at 3%, your income or the amount of inflation will double every 24 years. This year alone, we were in excess of 8.5% or 8.5%. So 8 years into 72 goes 9. So you can see how the inflation can really have a significant impact on retirement income moving forward. Let's look at, I'm going to step back here real quick, looking at the income, the accounting for inflation. I apologize, I'm starting to go too fast because I really want to make sure I get all this information to you. So unless you account accurately for inflation, you'll likely underestimate the amount of annual income that you will need in retirement. Inflation is basically a general increase in the cost of goods over time. In other words, the purchasing power of a dollar will likely decline over time due to the rising costs of goods and services. At 3% inflation, given a sum of money will lose half of its purchasing power over a 25-year period. Put another way, a 3% inflation on a gallon of milk that costs $4 today would cost about $8.38 in 25 years. Keep in mind that inflation doesn't affect all goods and services equally. In fact, retirees can be affected by a disproportionate increase in the cost of some things. For example, the cost of healthcare has historically increased at a rate higher than the average rate of inflation. Basically, all other things being equal, inflation means that you'll need more to retirement income each and every year of your retirement to keep pace. The impact on taxes is often sometimes overlooked. Taxes can eat into your income, significantly reducing the amount you have available to spend in retirement. You want to make sure that you understand whether income that you're continuing to count on is or is not subject to tax. For example, many are surprised to learn that a portion of their Social Security retirement benefits may be subject to federal income tax, depending on your filing status and your total income. You will also want to make sure that you understand how your income is taxed. Keep in mind that some income, like interest, is taxed at ordinary income tax rates. Other income, however, like long-term capital gains and qualifying dividends, currently benefit from special, generally lower capital gains rates or minimum tax rates. And some specific investments, like certain municipal bonds, generate income that can be altogether exempt from federal income tax and sometimes state and tax income as well. You should also understand how distributions from tax advantaged accounts like your traditional IRAs, 401ks are taxed. Generally, to the extent that a distribution form of the account or a plan represents earnings and or pre-tax contributions. If anyone here was born before 1936, there are also special rules relating to lump sum distributions from employer-sponsored retirement plans that you should be aware of. So let's take a look at some of the risks that are currently out in the marketplace. Some different types of investments carry different types of risk. Sound retirement income planning involves understanding risk and how they can influence your available income in retirement. Risks that need to be accounted for include investment or market risk, credit risk, reinvestment risk, interest rate risk, which we're really starting to see right now as the Federal Reserve continues to move forward with raising the interest rate and the impact there on bonds. And then longevity risk, which is becoming a bigger and bigger issue as we live longer into the future, and our income has to keep up with that. So let's take a look at some different times that carry different risks. Sound retirement income planning involves understanding these risks and how they can influence your available income in retirement. After you've estimated the amount of annual income that you're going to need in retirement, it's time to determine how much annual income you can already count on. Traditionally, retirement income has been described as a three-legged stool comprised of Social Security, retirement benefits, and traditional employer pension income or individual savings plans. The first two legs of the stool are Social Security, retirement benefits. Employer pensions produce a steady or relatively fixed stream of annual income that you can depend on during your retirement. As we'll see, most people aren't going to be able to rely on Social Security to provide for all of their retirement income, and you may not have an employer pension. That means the third leg, individual savings, is going to play an important major role in funding your retirement. You will have, obviously, with PARA, a very good pension. And again, I don't want to steal PARA's thunder, but that pension currently is inflation adjusted at 1.5% per year. So we'll talk about that, a little bit more about pensions here in a second. Today, 94% of US workers are covered by Social Security. The amount of Social Security retirement benefits that you're entitled to is based on the number of years you've been working and the amount of income you've earned. Your potential benefit is calculated using a formula that takes into account your 35 highest earning years. The best way to know how much you can expect in benefits is by signing up for My Social Security account on the Social Security website to view your Social Security statement online. Your statement contains detailed record of your earnings as well as estimates of retirement survivors and disability benefits and other information about Social Security. If you don't sign up for an account, you will receive a statement in the mail every 5 years from ages 25 to 60 and then annually thereafter. So the earliest that you can begin to receive Social Security benefits is age 62. If you decide to begin receiving those benefits before normal retirement age, which is 65 to 67, depending on the year you were born, there's a drawback. Your monthly benefit will be permanently reduced. Let's see here. In fact, if you begin taking benefits at the age of 62, each month a monthly benefit check will be reduced by 25 to 30% less than it would have been if you had waited till full retirement age. Conversely, you get a higher monthly payout by delaying benefits past your normal retirement age up to the age of 70. Of course, even though by taking retirement benefits at age 62, you're getting a smaller monthly benefit, you will end up receiving more benefit checks. For example, if your normal retirement age is 66, opting to receive benefit age 62 means that you will receive 48 additional monthly benefits. We've already mentioned that working in retirement can affect your Social Security benefits, and that's something you will want to keep in mind when doing so. Also noting the federal government periodically adjusts Social Security benefits for inflation. This year they received I can't remember, it was about 4.69%, but unfortunately most of that was eaten up by the increase in Medicare Part B benefits. So it was kind of a wash at that point. Let's see here. We've already mentioned that working in retirement can also, let's see, also worth knowing the federal government, let's see, boy, I'm so far. The bottom line though, for most people, Social Security alone isn't going to provide enough income in retirement. Consider, according to the quick calculator on Social Security benefits website, the individual born in 1952 who currently earns $100,000 annually can expect to receive an approximate $26,000 annually in Social Security retirement benefits beginning at full retirement age, which in this case would be age 66. Let's see. I think I'm getting close to running on time here. So I'm going to click through this real quick. So in looking at your para benefits, make sure you understand which pension options are available to you. Option 1, option 2, or option 3. Depending on your situation, those are going to be very big decisions for you to make. Inflation adjustments will be added to that, as you can expect. So make sure you read the plan of explanation for those benefits. Let's speak for a moment about, let's see here. Oh my goodness. I'm sorry. I'm having some technical issues here.
And Bob, you're down to your last 3 minutes. Thank you.
Okay. Let's see here. I'm going to kind of speed past this. I apologize. This didn't go as well as I had hoped. I guess one of the things I would like to sum up with is that for those of you who are out there, and I realize that you're all around the state, as a CFP, I would encourage you to get a hold of a CFP or a financial planning association member in your area. You can do so by visiting the CFP Board of Standards, where you can find a certified financial planner. And the reason is they have a fiduciary obligation to you. And they're always going to do what's in your best interest and put a plan together that works for you, that can meet you and your family's retirement needs. In this day and age, there are so many things going on in the financial planning industry, and almost daily we see things that are happening in the investment markets. It's a pretty scary place out there. So personally speaking to educators, the one thing that I would always say is, as an educated individual, I have never even entertained trying to educate my children at home. And so it really encourage you to talk to a professional when it comes to your retirement planning. It will be well worth your time. And if I can help in any way, I would be so happy to do that. Phyllis has contact information for me if you're in the Denver, Golden area. But if you're around the remainder of Colorado, and this is a very big state, and I realize there are a lot of people out in other communities, but there's many financial planners out there that can help you navigate these very difficult times. And I realize the education experience, and maybe some of you has experienced things like I have with teaching kids from home, and maybe a combination thereof. But again, I apologize. This isn't my forte. Speaking on a Zoom call and trying to navigate technology, but hopefully, if you do have any questions, please feel free to reach out to me or someone in this area, and I know they'll be glad to help you. Thank you.
Thank you, Bob. Did you put up your personal contact info?
Let's see. I'm trying to blaze through these contacts. Here we go. There it is. Right
there we go. All right. So Bob would like all questions directed to him. I know many were put in the chat box, but we're going to keep moving on, and we appreciate. So if you guys will quick jot down his information. Also, this seminar is being recorded. Anyone who has registered for the seminar will receive the entire recording for you to peruse at a future date. All right, just a few more seconds to get that information. All right, Bob, if you will stop sharing your screen. All right, we're moving on. We have a great video we'd love to share with you about the benefits of being a member. I will share my screen and that video now. And we're spinning. Can you all see that? Give me a thumbs up if you're seeing my spin. All right, I see that you're seeing it. Let me pause and try again. Let me see if I can get my other one. It looks like my videos are paused and not going to show. So guess what? We're going to have a live action commercial. So I will stop sharing and I'm going to let our featured member, Anne Franco, who is going to be in that video, unmute. Everybody should still be on speaker screen and she's going to give us a commercial about being a retired member. Anne, you're on.
So that commercial just said that one of the reasons why you should join the CEA Retired is to keep your member benefits. So if you like Phyllis said earlier, if you have your car insurance with California Casualty, or you have your home under California Casualty, or you have any of the NEA member benefits, as a retired member, you get to continue with all those NEA member benefits. So that's one of the reasons I wanted to join the retired, is because I wanted to keep all those benefits. And if you haven't ever went to get the benefits, if you go to NEA member benefits, it has all the benefits on there, so you can see what benefits we have as active and retired members.
Thank you, Anne, for doing that on the cuff. And I'm so glad you were here to do that. Thank you so much. All right, in the chat, I have put the link to go ahead and join your membership now. So I'm sharing my screen and I'm sharing with you that you can join NEA Retired and CEA Retired today for the price of $500. That is a one-time fee. That will get you member benefits for the rest of your life. If you use that link and join today, you're going to save $25. We received a grant from NEA to grow our Colorado membership, and we are giving you a check of $25. That price of $500 is going up in the fall. So even if you are not going to retire for a couple years, it's going to be your benefit to join now and save well over $25. They will keep your active membership still going, and you will be in what we call a holding phase for pre-retired. You're going to join the same way whether you are going to join pre-retired today or you're joining as a already retired member. And then what we will do is have your local retire group follow up with you if you'd like to join your local group. So when you join on that, you're going to go through the information and you will see a slide that gets to this slide when you're joining today. This is how you're going to fill it out. You're going to fill it out as membership time, as full-time. Even if you are a part-time worker, you fill this form out as a full-time. Your title is going to be retired. You're not going to put any other title than retired, even if you're retired. Your position, this is dependent on whether you are an ESP or a certified member currently. The subject, you're going to put either pre-retired or retired. So if you're already retired and you're not an active educator right now, you're going to put retired. Even if your membership, your active membership has lapsed, you're going to put retired. Your work site down here is going to be pre-retired or retired. Those are the special parts that you have to put on that form to join today. Should you join today, we will get your name and from CEA, who is collecting your application and your fee of $500. And CEA will issue your $25 rebate to you directly to your address that you put on that membership form. That savings is only valid today. You must join today to get the $25. Do not go to the CEA website and join on the CEA website. That is a different form. We are using a special form today that gets you that $25 rebate. All right, with that now, I'd like to introduce our next presenter. This presenter has a fabulous giveaway at the end of their presentation. You're going to want to stick around. I have all 410 of your names put on a spin wheel, and our presenter's giving away a TV today. So with that, I'd like to introduce Carl from NTA, National Teacher Associates Life Insurance, and Horace Mann. And Carl, if you will unmute, you are ready to go.
Good morning. Thank you, Phyllis. If I can have the ability to share my screen. So first and foremost, let me congratulate all of you that are currently retired or about to retire. It's been a really tough last 24 months. So I'm going to share my screen now and kind of go over what NTA is all about. So National Teachers Associates, if you haven't heard of it, have now merged forces, and we are one big family along with Horace Mann. So these are products and insurance products that have been founded by teachers for teachers, literally by teachers for teachers. So we've been around now at NTA for almost 50 years. We've been working with educators all over the country, from the state of Washington to Florida and anything in between. Here in Colorado, this is our 11th year. We now have well over 10,000 members throughout the entire state, from Fort Collins down to Beulah and Rye and anything in between. So what I'm going to do is just kind of briefly share some of the products overview we can talk about, but I'm not going to go into details because we'd be here for a good 30 minutes. So if you already have NTA, I'm going to put in a chat box right now a QR code or my email, so that way you'll be able to get into some more information through our SurveyMonkey slips, where it's just a website where you can get all of the information from us. So let me go ahead and share some of the QR codes here and then go from there. So first of all, let me go up to my screen here and take this off. I want to talk to you in regards to why supplemental health insurance. Over the last few years, especially the last 2 years, what used to be an option is now a must-have. And when I say that is, most of you currently have an insurance company like Blue Cross, Kaiser, maybe going into Paracare. And back in the days, we all know that insurance company could just take care of everything in the ER, emergency room, hospitalization. It's not so much the case today. As a matter of fact, according to the American Cancer Society and Heart Association, for every dollar that major medical spends, there's about a $2 in non-medical cost, and that comes out of your pocket. So what educators are looking for when it comes to supplemental health benefits are three things. Number one is comprehensiveness. We cover the things that happen the most, last the longest, but cost the most. Things like cancer, heart and stroke, accidents. How about if I just can't go back to work because I got into a car accident and hospitalization? So the second thing is portability. What happens if I'm retiring? Are the benefits that I currently have going to be able to carry over with me? Absolutely. As long as you make your monthly premium, this will follow you into retirement, out of state, and even out of the country. even out of the continental US. And then lastly is the affordability. Can I afford a supplemental health program? Absolutely. Most of our programs start at about $20 a month. So that's $20 for each individual plans. And so we can get into on what those plans are. Now, we all know that the number one reason of medical bills or bankruptcies are medical bills, unfortunately, over the last few years. And hopefully this will help you and understand better on why you would need a supplemental health plan. So we'll start out with our cancer plan. Regardless if you have a cancer history in your family or not, this is a program that I think has helped many, many educators throughout the country over the last 40 or 50 years because, and which by the way, the plan has not changed its premium since 1985. It's $20.30. You can get up to $22 at our green level, but our cancer plan simply educates a lot of people once they have our plan because of skin cancer, prostate cancer, any type of cancer. This is something that I think can help you financially. So all this money will go directly to you tax-free based upon diagnosis. So kind of give you a few examples what our cancer plan and what it does. Every single year, we encourage all of our educators to get a wellness benefit, which pays you $50 each and every single year. It's a quick way to access our portal online. And at that point, you can just get the $50. The goal here is not to be cancerous with any kind of diagnosis. You get a $2,000 payout, God forbid it is, as an express payment, $200, for example, for any hospital confinement, another $200 for any chemo radiation treatment, and that's per treatment. That's just not a one lump sum payout. These are benefits that are going to keep on paying you until the cancer is gone. To remove the cancer with surgery, this could pay up to $5,500. So this is money with a dollar sign that goes to you directly into your checkbook tax-free. Just like if I took $100 out of my pocket and said, here, go ahead and pay your bills this month. So this is your cancer plan. Our heart and stroke plan pretty much does the same exact thing. We're one of the very few insurance companies out there that provides a catastrophic heart and stroke plan. It's super comprehensive, just like the cancer plan. It works the same way. You get $50 a year for any screening due to EKGs, lipids. If you have a heart attack or a stroke, you would get $2,200 as initial occurrence. We're not seeing a lot of heart attack and strokes over the last 3 or 4 years. They're mostly being done by procedure. So we're seeing tons of stents, bypasses, angioplasty. So all of these things are something that can help you out with the finances. ER visits, you get $150 for that. Again, up to $5,000 for any surgeries. So all of this money, once again, completely tax-free directly into your pocket. Our accident plan is an injury plan that most educators enjoy based on, okay, if I like to travel now because I'm retired, or if I want to go visit my grandkiddos and we're going out on the beach or hiking, this is something that will cover you for any ER visits from a fault or car accident. It's really simple. You have 3 different levels. You can get as little as $75 or as much as a couple $100 for an ER visit. Same thing with x-rays. As little as $200 all the way up to $600. There's a hospitalization benefit as well as an ambulance benefit, surgeries, so on and so forth. Again, I don't have time to go over all of this right now, but I'll make sure that all of this is in the chat room. We do have a hospital indemnity plan that was just designed with NTA Horseman because of COVID. Most people don't understand the price that it takes to pay out of your own pocket until you end up in the hospital. So many educators who were in the ER over the last 24 months did spend at least 1 or 2 extended stay in a beautiful hotel with their local hospital, and they didn't like the bill when they came out. Average stay right now is about $3,900. Total average hospital stay is $15,000. That's with insurance. Does that mean this is what you're going to pay? Absolutely not. But the average COVID stay over the last 24 months was well over $11,000. So what this will do is give you $1,000 for an unexpected visit due to an injury or sickness. This will give you an additional $200 for each day thereafter, and then $100 when you are admitted as an observation benefit. It will cover ambulance ride, ER benefits, as well as advanced imaging treatment and benefit as well. So this is, again, a great way to supplement your income so you don't have to pay all this out of pocket on your own. And again, most of our plans start at about $20. Lastly, I'm going to finish up with our cash value term. Most educators, 99%, have what is called a term life policy, which is just a peace of mind. I think now, to get some return on investment, you can get into a cash value term, which can help pay for final expenses, so to speak. I did put here as an example, an educator is at the age of 64 years young, non-smoker, for a small $25,000 final expense policy. So the initial premium is $53.70 for that particular teacher. Again, this is an example. What Horace Mann will do is give $250, which is 1% of your face value, to your favorite charity for doing so. Most educators will do a 20-year cash value term based on what's happening in their life. But the nice thing about this plan is that at the end of the 20th year, when you blow out the candles on your birthday cake, you'll get some of that money back that you've invested. So that $53.70 doesn't go to waste. It's not just a peace of mind. It's a return on investment that you can guarantee and look forward to in 20 years. So here's an example. After $12,000, you would get back about $7,500 back to you. If you elect to continue the coverage to your 95th birthday, we have what is called a rate paid up, where you can have no more premiums to be paid upon, but your face value drops down to about $12,500. So this is just a small example of a cash value term. Most educators that I've talked to are mainly interested, along with our supplemental program, specifically the cancer and the heart plan, along with the accident, and now the hospital plan that's available out there. So I know I've talked and given you quite a bit of information at 100 miles an hour. And the reason behind it is I want you to keep this as simple as you possibly can. Don't worry about what's going to happen over the next 10 or 20 years. Just understand that it's not hundreds and hundreds of dollars that you would be spending for supplemental health care. It's, again, $20 per plan on average that you can have. Whether you want to put yourself and your family on the plan, you can do so. They are age banded, so 64, again, the age of 64 years young is the last year to enroll in this plan. Once you turn 65, you'll probably go into Medicare, but these plans will carry on for the rest of your life, even at 70, 75, or 80. So I hope that you got a little bit of information out of this. I really appreciate your time. Thank you again, Phyllis, for inviting us. I'm going to go ahead and put a QR code on the chat room along with my email. Again, my name is Carl Panunzi, or you can call me KP. I'm the benefit director here for the entire state of Colorado. Whether or not you think you are coming back to school part-time next year or not, again, you can use this on top of, above and beyond everything you currently have. So best of luck to all of you. Congratulations again with your retirement. And let's hope we have a great winner for our TV.
All right. Carl is putting his contact information. You can also, if you are the lucky winner today, direct message him through the chat, and he will contact you about going to the nearest Best Buy to pick up your TV. So with that, I'm going to share the wheel, the lucky wheel. Here we go. We're going to move over to the wheel. I have 407 names on here. I will spin. You must be present to win. So if this is you, if you will unmute and say, that's me, I will stop spinning. If we don't have someone present here, then I will spin again for the lucky TV. Here we go. I will do this full screen. Crossing your fingers, who's going to win? Our lucky winner is Mr. or Mrs. Reimer. Mr. and Ms. Reimer, are you here? All right, seeing them not here, we're going to spin again. Cross your fingers. Archer, Mr. and Miss Archer. Grabbing the wheel. Anyone go ahead and grab the wheel, grab the microphone. All right, not here, spinning again. Is that lucky winner here? Oh my goodness. Is this lucky winner here?
Did you notice that somebody you spun was here? They were trying
Yeah.
to get your attention.
Yeah, Reimer.
John
Reimer
Reimer.
is there. Reimer. is
Reimer?
there. John
All
Reimer is
right.
there.
Reimer, you are here. Thank you for helping me because I can't see all of you while.
Congratulations, John.
All right, John, if you will just put your information directly to Carl, he will be in contact with you on how to get that TV. All right, thank you. Thank you, Carl, for being here and allowing us to give away that TV today. Next up, we are going to have Susan Estes. I see she's on. Susan, do you need to share the screen if you'll unmute?
Yes, please.
I will
love to
give
share my
you
screen.
co-host permissions to do
Thank
that.
you.
Here we go. So that you can do that. And with that, Susan Estes from NEA Member Benefits and all the ways you can keep all of those benefits by staying a retired member. Susan, you're up.
Thank you. Let me get this pulled up. How are y'all doing on a Saturday morning? Having a good day so far? I like that spinny wheel. That's like really cool, really cool. All right, what I'm going to do is while I'm talking, I'm actually going to mute my camera, turn it off, because for those of you that have been with me in person, you know I make silly faces and I'm always moving my hands around and it just doesn't convert well, I think, to a virtual environment. So I will turn it back on when I finish. I appreciate you guys allowing me to come out and hang out with you this Saturday morning. First things I'd like to have you do, if you don't mind, is write down this website, neamb.com/start. If you haven't already created your account for member benefits online, this is how you're going to do it. You can scan the QR code or you go to that website. You're either going to register now or you're going to sign in, and that's going to let you unlock all of the programs and services. First thing I'm going to do is we're going to talk a little bit about retirement planning. We have a nationally endorsed program with security benefit. The NEA retirement program will let you take advantage of your 403B tax deferred retirement accounts. You're also going to be able to choose from traditional IRAs or Roth IRAs. We have Direct Invest, which is a program that you can do your investing on your own. We also have an IRA certificate of deposit that you can take care of. Many of your school districts already have a retirement specialist that is assigned to your area, and I'm sure at this stage of your career, you know who yours is. If not, you can always look that up on the member benefits webpage. Student loan debt. I know at your stage of your life, you're probably thinking, what, student loan debt? You would be amazed at how many late career educators have student loan debt. With all the different changes that they have now through public service loan forgiveness, we are encouraging everyone to go to our portion of the website that talks about student loan debt management. The NEA Insurance Members Insurance Trust, they are actually picking up the first year's expense for having this premium service. They will process your paperwork for you. They'll keep you abreast of any changes that are on the horizon, and they'll make sure that all deadlines are met. Now, if you do not have student loan debt, congratulations. If you want some of mine, I'll be happy to transfer it over to you. But you may have family members who do. All family members can, immediate family, can take advantage of your NEA member benefits, products, and services. So keep this in mind if you have someone that you love that can take advantage of this. We have a personal loan program. If you may need a personal loan, more than $5,000 to consolidate, do some house repairs if you want, go on that dream vacation once you do retire, we have a personal loan that can potentially help you. You're going to get fixed rates and there's no collateral. You can get loan amounts from $5,000 to $30,000 and variable terms. We also have an online savings account that you can do. Historically, it is earning more than 18 times the national average. You can fund your NEA Smart Money account through your existing bank account with an automatic transfer, or you can actually set it up as a payroll deduction to have it go from your paycheck right into the account. So you're not going to miss that money at all. You always get 100% of your cash while it's earning interest. It is FDIC insured, and it's available to all current and retired NEA members with no credit check. Oh, I duplicated a slide. I apologize. NEAMB.com/start is the website that I'd like you to try to go to following this. But I want to make sure that you understand some of the insurance products that NEA member benefits does offer for you. And keep in mind, these are all NEA approved vendors and our business partners. So when you are a first-time member, or if in your building you know that you all are doing a membership push for first-time members, they're going to receive a provided $15,000 term life insurance at no cost. They're going to get this for the first 12 months of their membership. At that point, they can then convert it over to a permanent policy. A lot of you all are aware of the NEA complimentary life insurance. This is eligible for NEA members while they are still in the classroom. We get a lot of questions from people retiring. Well, what happens to my complimentary life? If you are active teaching, so you're in a classroom, you will be able to continue your eligibility for NEA complimentary life. You need to make sure that you have your beneficiary named so that if anything were to happen, we would know who to get in touch with. Because face it, the people that you liked way back when may not be the people that you like right now. So we want to make sure the current people that you love in your life are getting taken care of. Shopping. We used to have something called Click and Save. A lot of people would use it. You get these wow points that honestly hardly anybody ever used. They would not burn them, which is what they call when you would use them to offset purchases or to get free things. And we felt that members deserved a lot more. We have a month-by-month shopping guide that will give you helpful tips on when to purchase what. Plus, you're going to have a lot of different articles online through our website on teacher discounts. And you can use these discounts into retirement. That's the great thing about being a CEA NEA member. Your benefits are going to continue through retirement. To replace the Click and Save, we have started NEA Discount Marketplace. Some of you may have already heard this, but I will go back over it for you. In addition, we now have a new NEA discount ticket program. This is our newest service. It's really exciting. As always, we have our NEA hearing program. So you can take advantage of that or have a special someone to you take advantage of it. That way they can't claim that they didn't hear you when you asked them to take out the trash or do the dishes or laundry. And then as always, we have our NEA magazine service. Every member, even retired members, get 2 free magazines per member per year. I'm not gonna lie to you. Sometimes the magazines that are in the free category, they're okay, but they're not always all that. But they do them on a rotating basis. So if you are not finding something that you like right now, you can always go back every year to check and see what they've changed it to. And if you need to get a gift for someone that you really just are not sure what to get them, you can use one of your 2 free magazines per year for that gift. In addition to the 2 free magazines, if there are other magazines, periodicals that you like to look at, but you find that they're just too expensive when you're standing in the King Soopers line to want to pay that, you can take advantage of the NEA magazine service. This is where you're going to save up to 85%, over 800 magazine titles for yourself. Use it for your classroom, or again, as a gift for that special loved one that you just really don't know what to get them. Keep this in mind if you have children or grandchildren going off to college. You can always send them a magazine subscription, because I know when I was at school, I loved getting mail. So this might put a smile on their day, especially if they've had a rough one and maybe midterms didn't go the way they wanted or something. You can brighten up their day with a magazine. NEA Easy Pay. We had this program before, and the partner that we were with, we didn't feel was really running the program at the level that we felt members deserved. So we ended the partnership. We got back with them after we requested a reorganization of their program. And I have to say, they took us seriously on the suggestions that we made, because now it is so much easier and so much smoother. And I have even taken advantage of this. I wanted to get my husband a new laptop, and he wanted a MacBook. So I went to Easy Pay and I saw that they had some. It was great. No interest, no finance fees. Didn't have to do a credit check. It wasn't like you had to have an annual fee to join a shopping club or anything like that. But I was worried. I was concerned that their electronics, especially computers, were refurbished, because sometimes with discount shopping websites and platforms, that's what you get. You think you're getting new, but it's really refurbished. I received correspondence within, 12 hours, if that long, from a representative from Square Deal Market, who is the base for our Easy Pay program. And they only sell brand new electronics. So that sealed the deal for me. I knew that with it being brand new, with warranty and such, I could not go wrong having this affordable way to pay for a MacBook, because if you all have looked at those lately, they're very expensive. Your credit limit for shopping is always tied to how much money you make. So you're going to put in your salary, you put in your pay dates, the payments will automatically come out of your account. So you don't have to have one extra thing that you need to remember about. And now the NEA discount marketplace. Oh my gosh, this is so much fun. Have you all heard of Rakuten? You know, the people that send you the big check, the big cashback check from when you do online shopping. Well, that's who we've now partnered with for our NEA discount marketplace. When you go into the NEAMB website, you're going to click on NEA discount marketplace. There, you will be able to link your current Rakuten account, or you can add a new Rakuten account. Once you do that, your online shopping is then going to be with member-only discounts. And once your account order is confirmed is when you're going to get that cash back added to your account. There are member-only benefits that rotate each month. They're going to have member-only pricing, flash sales, and enhanced cashback offers on popular retailers. Let me tell you, almost everybody is partnered with Rakuten when it comes to offering these cashback deals. So this is really, really a great program. Some of you through Click and Save maybe have used restaurants.com certificates. They're still there. You just go in through the NEA marketplace. It's so easy, and they actually do what they say they'll do. For family and wellness, the last couple of years, unfortunately, as if, education wasn't stressful enough, the pandemic has put unnecessary stress on everyone. We wanted to have an option that we could offer members for an online mental health program. We've partnered with Sanvello. You're going to be able to get an app if you download it. It will provide tools that can help you learn to manage stress, relieve anxiety, and hopefully just to make you feel happier. You can do various things with this. You can use it for daily inspiration and, tips on keeping your cool and stuff. Or if you want to, you will get free unlimited access to their premium program for 30 days, and then a 25% discount after that, if you're wanting to go deeper into the Sanvello program. If you want to have a life coach, you can do that. You're going to get a 10% discount on life coaching, which will help you one-on-one with personal support. And you can also do anonymous group video sessions. Vacations and travel. This is one of our most popular things, as you know. NEA travel program. You can book your airfare, your cruises, your car rentals, your guided tours, and your hotels. Every member annually, including retirees, will get $500 put into their virtual travel account from NEA member benefits. With this, you're going to be able to offset the cost of a vacation. You may enjoy traveling if you're like Beverly from up in northern Colorado, Fort Collins, Greeley over in there. She goes everywhere. I loved all of her pictures from her last trip in Africa. She could be someone just like you who wants to have the additional level of travel options. So there's an actual travel club that if you choose, you can take part with that's going to open up additional discounts and travel and group travel opportunities for you. For your car and your home. I understand that Jolie is going to be coming up after me, which is great, but I would be remiss if I didn't just go ahead and give a quick plug for California Casualty. They have our NEA auto and home insurance program. You can get condo insurance, renter's insurance, and I can't say anymore because I don't want to take away her part, but really pay attention when Jolie comes on. We have, like I said, the NEA auto insurance provided by California Casualty. But did you know that we also have an auto buying program? So if you're needing, or if you have a family member that needs to get a new ride, being automobile, Jeep, truck, SUV, I don't know if they do station wagons anymore, but you get what I'm talking about. You can go online and basically pick the type of car that you want. You put in the radius of how far you're willing to travel to go pick up said car. And then when you hit the submit button, you're going to see a list of dealerships who are part of the NEA auto buying program. That means that once you print off and select one of the offers that has exactly what you want, or if you can't find it exactly, it's pretty darn close, you're going to take that voucher into the dealership. They are not allowed to haggle with you. They are not allowed to change that. Only if they're going to make it better. They can't up the price or anything like that on you, because if they do, they're going to be removed from the program. And that's a lot of potential customers that they're not going to have access to through this NEA auto buying program. Generally going to see an average savings of around $3,026, but you can also do more. Phyllis, I see you raised your hand, but I'm not monitoring chat or anything.
Oh, I just put something in the chat for everybody who has ever used member benefits to raise their hand. I wanted to see all the hands while you
thank
were talking. So just ignore us. Keep going.
Phyllis, honey, I'm just going to ignore you, which is hard to do because you know you're too awesome. If you want to double check, to review the 14-point checklist to buy a car, you can do that through our website. Many of you all here in Colorado know a friend of mine that is now in Kentucky, but I heard from a secret bird or something that she's going to be moving back to Colorado because she's retired. I'm talking about our dear friend, Rosalind Bryant. She took advantage of the NEA auto buying program. And if memory serves me correctly, she had a savings of near $7,000 when she purchased one of her vehicles. It works, I promise you. Pet insurance. Okay. You may have heard this before, but I'm still going to repeat it. This is the craziest thing I discovered that we offered when I came on staff at Member Benefits. Evidently, NEA members have a lot of high maintenance animals. They're possibly more expensive than some of the children that we may have raised. The NEA pet insurance program is going to let you get personalized insurance coverage for your furry friend. Generally, it's dogs and cats. So if you have, a llama or an alpaca or a sheep or a goat or a cow, depending on where you are, I don't think they're going to be covered, but you know what? You can always check and see. things can change. But again, generally it's for cats and dogs. Plans start as low as $6 a month for cats, $9 a month for dogs. This is a great way if you have a pet who is, let's say, prone to certain illnesses and issues that they have based on their breed. I know a lot of dogs have issues. Some have issues with their hips. I think pugs, if I'm not mistaken, have an issue with breathing because of the way their face is made. Cocker spaniels or other dogs with floppy ears, they're prone to ear infections. So this is a way that you can get the care that your furry friend may need without you having to take out a second mortgage on your home to do so. I want to make sure that you stay in the know with what's going on with member benefits. You know how to sign up, so ignore this /sign me up. That's for people who are just perusing around and didn't attend one of our sessions. I want to remind you to register your beneficiary. This covers for your NEA complimentary life while you're still teaching. And also, it's good to have your beneficiary listed for any of the other great insurance products that you may be taking advantage of. Sign up for NEA vacations. You're not really signing up per se, but once you go into the travel portion of our website, they're going to consider that your anniversary date. Every year on your anniversary date, they're about within a day or two, maybe a week, you're going to get $500 automatically deposited in. And I know Lori's thinking about this. She's thinking, well, if I don't use my $500 a year and I let it bank for up to 3 years, I'll have $1,500 and I can go big. Well, unfortunately, that is not the case. You either use it or you lose it, but you don't really lose it because it comes back. But every year you will get that $500 in. Subscribe to our newsletters. They have helpful tips and solutions. And then make sure you follow us on social media. We're on Facebook and Twitter. I am trying to get established an Instagram account, if any of y'all do Instagram, to where I'm able to push out different products and services and tips for utilizing your member benefits. You can always go to neamb.com, just the regular website, if you need help or assistance. And if for some reason I'm tied up and you guys can't get a hold of me, please do that. You can call toll free, and language will never be a barrier for getting assistance on your member benefits. I'm going to stop my share.
Thank you, Susan. Do we have any giveaways from you today?
I am going to be doing I can't make up, Phyllis, should I do 1 or 2 gift cards? You tell me. Or
2,
2, 3,
3,
3. We'll do
4.
3. We'll do, oh wait, Brett says 5. Oh my gosh. Okay, I will do 5. I'm going to do 5 $10 gift cards to y'all like Zicky's, Dutch Brothers, Scooters is now here in town. I love them from, so something Starbucksy, something like that most people can use.
All right. Whenever you're ready.
You get, oh, that's right, Christy. You get a gift card. You get a gift card. You get a gift card. Okay. Oh, someone suggested Panera. All right, here's what I'm going to do. I'm going to do a $10 Panera card. That might get you 1 bowl of soup. Somebody said Chipotle. Okay. I'm gonna do a $10 Chipotle card because that might get you some chips. And then I'm gonna do 2 Starbucks at $10 each. And I'm gonna throw in a Ziggy's card because I love Ziggy's and I'm totally addicted to their Italian sodas. So we're gonna do a $10 Ziggy card also.
So that was 5 winners, Susan.
1, 2, 3, 4. Yes, that will be for 5. Oh, what is Ziggy's, Sarah? Ziggy's is so good. It's like a little coffee shop thingy. They have all sorts of stuff. They even have great sugar-free flavors. So if you're diabetic like me, you can still get all that flavor without the extra sugar. All right, Phyllis, I'm ready.
All right, we're going to spin the wheel. If you're a winner, you're going to unmic or go to the chat. And I need people watching the chat, and I won't be so quick to spin. And Susan, do you want them to tell you which one they want?
Sure.
Okay, they're going to tell you which one they want, and then you'll collect their contact information with the direct message. All right, here we go. First winner.
All righty.
Must be present to win.
And if you don't have anybody to go with you, I'll always go eat and drink with you.
Okay, Mr. and Miss Brooks. Mr. and Miss Funk.
Come on, big winner, big money. Come on.
Snyder. And I'm going to keep going since we have 5.
Well, my goodness.
I know. Look at all these people missing out on winning.
See, they should have come to this seminar.
They should have come.
So Margaret Engler, you were just chosen, so you should still be in on the Zoom.
So we have 1 winner so far. And Margaret, if you'll contact Susan through the direct message.
And just to let you know, the Chipotle has been cleaned.
Okay, Chipotle's been playing.
And what I'm gonna need from the winners, if you would send me your mailing address along with your email, that would be great.
John, a lot of people not here, huh, Liza?
Yeah, I'm searching every time a name pops up.
And I know you all are monitoring your time. So if we can get all 5 of these done at one time, then please feel free to move on, and then you can do more spinning later if that would help you guys out.
Why don't I do this? Let me close this. Susan, if you will talk amongst yourselves, I'm gonna pull from the chat. I'll pull all the names from the chat that way. Let me stop sharing. You guys talk just a second. Let me pull the names and I'll revise the wheel. How does that sound? Let's see if I can do that. I don't know it is going to let me copy paste. It is not. Okay.
You could always give me a number between 1 and 136 or something, and I can look in the chat.
There's a bunch in the chat.
Yeah, there's 136.
No, a bunch of people saying they're here.
Oh, yeah,
They're
yeah. I'm
here?
just looking at
Oh.
the
How many
participants that are
winners do you
still
have?
in.
All right, I
we have
put
136.
in my email address. That way the winners, if you all do need to move on. can
Okay, I'm
email
gonna
me
do
their
this. I'm gonna pick, we need 4 more winners, correct?
Yes,
Yes.
please.
Okay. The first winner off the first page is gonna be Brett Hamilton.
Brett Hamilton, congratulations. Oh, he's the one that made me do 5.
That's right.
Should have held up 2 hands.
All right.
Yeah, Brett.
Page 2, Sylvia Hall. Sylvia Hall, unmute.
I'm here.
Okay,
Yay.
on the third page,
Okay,
I'm gonna
need
do
to choose what
D
they want
Lindstrom. D Lindstrom wins. D Lindstrom.
Thank you.
On the 4th page, Angela Rivera, you win.
Woo!
Okay. So
okay,
if you guys will send your information to Susan, I think that's 5 winners now.
yes, and I need to know what they want. I still have the $10 Panera, the 10 Ziggies, and 2 Starbucks. So Brett, what do you want?
Starbucks. I'm made
Okay,
the screen small, so I need to change the chat. I just copied your email, so I'll be emailing you.
sure, thank you. Who else?
Thank you.
Sylvia.
I said, I'm sorry. I was trying to write it, but I hit it too fast. Starbucks, I guess.
Okay. And email me your information, please, because when I get off, I'm going to lose the chat.
Okay, so where do you want me to put that?
I'm sestes@neamb.com.
Just your last name? I'm sorry.
My first letter, S.
Okay,
My last name, Estes. Let me put it in again just to be safe.
okay. Thank you so much.
Sure. Okay. So I have a Panera and a Ziggy's left.
This is Angie, and I would love the Panera.
All right, Miss Angie. So who's going to get the Ziggies? Because you got to take me with you.
I think I'm the Ziggies.
D. All right. I will be looking for your email. I appreciate this. Thanks for letting me take part. You guys have a great day.
Susan, thank you so much for coming and sharing all of those benefits. Even though you were here, there's still even more on that website. I have explored, and every time I go back on, I find something new. So thank you so much for being here.
And if you ever
giving
want
out
to
some gift cards.
schedule an online demonstration, just let me know and we can just do it online and people can participate in everything.
All right, now with that, we have another member, another presenter here who's going to share that what Ann and I specifically said we did not want to lose. So would everyone welcome Jolene Spence from California Casualty, another member benefit for keeping your retired membership going.
Thank you, Phyllis. And thank you so much, everybody, for having me. I'm going to go ahead and share my screen real quick. Let's see. Hold on real quick. Sorry about that. Okay, my name's Jolie Spence, and I'm with California Casualty. For those of you who don't know about California Casualty, we are the exclusive home and auto company for members of CEA. We were endorsed by CEA in 1996, and on average, we save our policyholders about $423 a year. We have a 99% customer satisfaction rating, and some of our coverages that are unique to you as educators would be if your vehicle is damaged or vandalized in the school parking lot, your deductible is waived. We also offer pet injury protection coverage, so up to $1,000 if your dog or your cat is in your vehicle and they're injured. We also offer free ID defense coverage, and we offer up to $3,000 in coverage that will extend to the classroom for personal property for items such as your laptop, any instructional materials, that type of thing. So we are exclusive to you. When I say we're exclusive, I mean we don't write for the general public. We only write for you as educators and retired educators, police, fire, and nurses. So right now we have a couple of really cool things going on. My QR code is in the bottom, and then when I'm done, I will put my link in the chat. But right now, anybody that gets an auto quote with us gets a $25 Amazon gift card. In Colorado, we have a lot of things that impact our rates, such as fire, winds, hail, that type of thing. So it's always really good to check your rates every couple of years just to see if you can find a better rate. And we do offer a group rate for educators. And then up until June, we have our music and arts grant. So every year we give grants, music and arts and athletic grants. And I will also put that link in the chat. So if you are a music or arts teacher, band, orchestra, theater, or you would like to nominate somebody, you can click on the link and just type in the information. And like I said, you have until June to enter. So that's really all I have for you. If you have any questions, feel free to reach out, but I will put my quote link, or you can use the QR code, and I will also put the music and arts grant link in the chat. So go ahead and enter because I would love to give it to one of you. So let me know if you have any questions. That's all I have.
All right. I'm not seeing any questions. If you have a question, if you'll raise your hand and go to the front, your raise your hand icon is under reactions.
And then I'll put those links in the chat. So if anytime you want to get a quote or just nominate somebody, like I said, you have until June.
All right, I'm not seeing any hands raised for California Casualty, and lots of chat has been had sharing the benefits of yours. My husband actually was in the automotive business and dealt with California Casualty on the other side of people bringing a wrecked vehicle to them and needing some things paid. And he said on that side, it was brilliant too. So he's a big fan too. And my daughter moved back, and as you know, family members can also take advantage. So she also has California Casualty due to my ongoing retired membership and involvement in California Casualty. All right, Jolie, do you have any giveaways today?
I have one question.
Yes.
I'm kind of mimicking what I saw in the chat. What about young adults like our children that are 21? Can we get a discount for insuring their automobile?
Yes, you can. They can either be on your policy or they can have their own policy because you are members. And they do get the discount. absolutely. And if they're good students, they get a very good rate with us. So I definitely would recommend checking. Yeah, so they are eligible.
And then is your information in this chat? I don't see it.
I haven't put it in there yet. I will put it in just a second. I'll put the link, and then I will also you can use the QR code. So the way the QR code or the link will work is if you just put your information in, somebody's going to reach out to you, I would say probably by Monday or Tuesday, from a 913 or a 719 area code, and they'll just give you a call. And they'll just ask for a little bit more information, because when you enter your information online, it's just basic. So it's just going to be your phone number, your first and your last name, and your email address and your address. So they'll give you a call to get, the VIN numbers, the birth dates, and that type of thing. But they're all really great to work with, and they will give you a call from a 913 or a 719 area code.
Thank you.
Of course.
And Jolie, do you see that question in
I
the chat?
do. Yes, that would also be eligible. It's for any arts program, any music program, elementary, middle school, and high school, and K through 8s. So.
And then Jolie, did you have giveaways for us today?
Yes, I have a $25 Visa gift card.
Okay, I'm going to my next page that I left off, and Michelle O'Brien, you're our lucky winner. Are you still here?
I am, thank you.
All right, and if you'll, Jolie, did you put your contact information in?
I'm going to put that all in right now. So then if Michelle, you want to just shoot me an email and we'll get everything figured out.
Sure, that'd be great. Thank you so much.
Of course.
All right, we're going to try showing another commercial. I think I have it working. Let's go to that and see if we can get this to play for you. Are you all seeing that? Let me move you to the front again. If you are seeing that, can you give me a thumbs up? I see that you're seeing it.
Michelle Pearson. I'm
Can
the
you hear it?
2011 Colorado Teacher of the Year, and I'm a proud member of my local association and the Colorado Educators Association and NEA. You are your association, and I fully believe that we all are part of our association, not only as a teacher, but also when we retire. So much so that I've invested in that. I have purchased my retired lifetime membership early because the price keeps going up. Who doesn't like a bargain, right? But more importantly, who doesn't like to stay involved in the decisions that are made for your profession, one that you've invested in, believed in, and worked for all of your career? So you can be part of that retirement early. You can purchase your retirement card. Here is mine. I pulled it out. You can buy it as a lifetime membership. We encourage you to do this, and I encourage you to be part of your association. Stay involved, be active, and be a lifetime member. Thanks for considering it, and we look forward to having you as part of your local, your state CEA, and NEA throughout your retirement.
And I should have you. That is Michelle Person. She is a former Teacher of the Year and still a current teaching middle school teacher in the Adams 12 and a member of DTEA, our infamous Lori Goldstein's district that she is president of the school board. And she talked about something really important, which is many of us are activists also. And we joined our union for many reasons, not just to save money, but to be a collaborative voice. And our collaborative voice as a retired membership is powerful. Bev Green and I from Greeley, I'm going to introduce you in just a minute to Bev. We went to the National Retired Leadership, and we heard that they in Texas are really teaming with their retired membership, and they're growing their membership exponentially. And we know all of the politics that's going on in Texas these days, so they really need it. So if that is of interest to you, we know that this membership would be a powerful piece. So with that, I want to introduce Bev Green. She's going to come on, and she's had some brilliant things she's been sharing with me in the chat about staying a retired member and some of the data. So Bev, will you unmute and turn your camera on? You're on for a quick commercial.
Hi, everyone. My commercial is that if you take that $500 that is your lifetime membership and divide it by the next 25 years that you're going to be living, that's only $20 a year. Continue your support for public education, to continue to get the information and communications. And I put in the chat that I saved $75 a night in a hotel last Labor Day in Chicago, cheaper than I could get on Expedia or Kayak. I think that's worth it. There's lots of benefits for being a retired member, and we hope you'll all consider it. Your $20 a year is worth your 2 free magazines that Susan was talking about. Thanks.
And I'm just going to share my screen one more time, and I've added some details because I forgot to put your ESP price. ESP, your price for lifetime dues is $280. So you're considerably less, as you should be, and you will save your $25 off of that price too. Here's a reminder of how to join and how you fill it out. At the top, you're going to put membership type full-time, whether you're part-time or not. You're going to put retired. Everybody puts retired there. You're going to put if you're certified or ESP, because that's going to be dependent on what you get charged, either the 500 or the 280. The next price the next thing you're going to put either pre-retired, or if you're already in retirement, you put retired there. Your work site, you're going to put pre-retired or retired there also. All right. With that, let me see if Matt, has anyone seen if Matt has joined us yet? He is here. That means we can start early on our para presentation. So Matt, I'm going to make you a co-host also in case you need to share the screen. And Matt is here from para, and he is here to share all sorts of things about your para. All right, Matt, you're on.
Thank you. Let me make sure that I turn off all my other sounds. All right, fewest interruptions possible. Good morning, everybody. Happy Saturday. It's very nice and sunny outside. I don't imagine that helps. Okay, so let me go ahead and share the presentation here. And there it is. All right, so what I'm going to be talking about today is the retirement process. This is kind of designed to just give you all the information you need to actually go through the process of retirement. I'm going to turn on my camera here. I seem to have lost my Zoom controls. Give me 1 second. There they are. All right, good morning. So the process to retire with para is completely separate than leaving your employer. So it is possible to leave your employer and not retire with para. And so this process that I'm referring to today is going to be mostly focused on what do you do when it comes to retiring with para, and how can you set yourself up for a good retirement? And so I'm going to go ahead and just jump right into the topics here. Preparing for retirement has a lot to do with budgeting, and it sounds like oftentimes we'll ask people, how do you know when you can retire? And they'll say things like, well, when I reach the rule of 80, or when para says I can, or when I've had enough. Those types of answers we get pretty regularly. But really what it comes down to is creating a budget that you know that you can confidently retire and have plenty of money to pay all of your monthly expenses and probably a little bit extra. So let's talk about how you can get to the place where, and I'm not sure of the complete structure here. So if I see questions in the chat, I will try to answer them, but I may not see them. Just let me, and Phyllis, if you could let me know if I'm missing anything also.
I'm happy to. Do you mind if we interrupt you, or do you want us to raise our hand?
Oh, just go ahead and interrupt. It's fine.
Okay, I will do that.
All right, thank you. Okay, so the first place to get information about your retirement income would be para. For probably a good many of you, the primary portion of your retirement income will come from para. And so using this, what we call a benefit estimate, you can request this benefit estimate from para if you're within 2 years of retirement. They typically reserve that for people within 2 years because they tend to get overloaded, especially during retirement season, which is right now. They are they are really swamped right now because so many people plan to retire in the summertime. And so I want to highlight a few things that are on this retirement benefit estimate here. When you request this estimate, you can actually request more than one date. So you can see here the projected retirement date on this form. It says 10/1 of 2021. That would be October 1st of this year. And we'll get more into the specifics of your retirement date with para in a little bit later on. Now, this is going to show you a lot of other really important things. Now, I want to distinguish between two different types of benefit estimates. You can use the calculator on our website. And if you've never used that calculator before, I think it's a good place to start because it'll give you a really good ballpark of what you can expect for retirement. But to get the most accurate benefit estimate, you want to request the official one because they're going to audit your account. They're going to make sure everything is exactly as it should be, and then they're going to send you this. You can also request multiple dates. So if you're not sure, you might want to be retiring in this June, or you might be thinking, well, maybe I should do one more year just to create a little more security. You might be looking at things like inflation at 7% and thinking, wow, I should probably do a little bit more to create extra income for retirement. That might look like working longer. That might look like purchasing service credit. And we'll talk about all of those things coming up.
Matt,
Go
if I
ahead.
can interrupt, we have one question that gives specifics of how long they worked and when they qualify. Do you want us to hold off on that one?
So yeah, the concept of when you qualify for retirement, it is based on your hire date and the table you're on. But the easiest way to figure out what is the earliest date that you would qualify for full service retirement with para would be to log into your para member account. And I'm actually going to grab you a resource link right now. This resource link is it's a page that has not only the slides that I'm using for this presentation, but it has helpful links that go along with each slide. One of the most important things in doing all of this, planning all of these things, is logging into your account. And so if you've never done that before, I'm going to go ahead and share this. This is our resource page, and I'll put this in the chat. Make sure it's to everybody. There we go. So that resource link is going to help you get logged into your account. It'll give you all kinds of other information. You can look at your highest average salary table, but if you're within a few years of retirement, the table itself is not a very accurate predictor of things. So I recommend you go to the monthly retirement benefit calculator, and to get there, you would log into your account, look just below your name, and you'll see, what does it say? It says estimated monthly retirement benefit, I think is what it says. And you can click on that. It'll take you to the calculator. Now, when you look at that calculator, it's going to have the first date that you are eligible for full service retirement with para. So that's really the best way to get your first eligibility date, is because the calculator auto-populates that. It already knows when you are going to be first eligible for retirement. So hopefully that answers the question. We'll also go through a little bit more information about what it requires to become retirement eligible. And if you want, a little bit later on, if we have time at the end, we can actually look at a retirement table. Okay. Just seeing if there's anything else. Okay. Is the estimated highest average salary, is it the estimated highest average salary? No, it's actually the monthly retirement benefit calculator. So you should see I think it's the first option underneath your name if you're logged into your account. And if you could clarify what you mean, Vanessa, where is that information? It's on the website when you log into your para member account.
Okay, is that also the same tiles as like what school district we're in, or it's a separate website?
No, this would be the para website, copera.org, COPERA.org.
Thank you so much.
Yeah, sure. Okay, so other things that are going to be on this benefit estimate, it's going to have your age as of that effective retirement date. And one thing you can notice about both the service credit and the age as of your retirement date, they're both rounded to 3 decimal places. There's a lot of focus when we talk to people about getting to exact years, like I need to get to 30 years or 25 years so that I can retire. And you're like thinking, oh, I only have 24 years and 11 months, I can't retire yet. Well, para prorates, even if you had a partial month, para would still prorate. So you would get exactly what you earned. We don't round to whole years, we actually round to 3 decimal places. So that would even include extra days. Every day that you work, you're getting credit for. And then finally down here, your highest average salary. And the highest average salary is going to be based on your highest 3 years of earnings. If you're someone who had more than 5 years of service before 2020. So if you got to 5 years, basically if you were hired before 2015 and worked continuously, then you should have a 3-year highest average salary. If you had less than 5 years of service credit before January 1st of 2020, then you would be on a 5-year highest average salary. There's not a lot of difference in the actual number value of that. It's just that in that 5-year highest average salary, it protects the pension a little bit because it requires that you, if you get a pay raise, a substantial increase, you have to stay in that range for longer. And so it insulates the pension from risk. Okay, so a couple of other things that we will talk more about in the future. Down here at the bottom of this benefit estimate, it's going to tell you what your option 1, 2, and 3 benefits will be. And we're going to come back to that topic when we talk about selecting an option. And so we're going to go ahead and move on here. All right, Social Security, you may be eligible to collect Social Security and para. A lot of times people will ask us, well, you can only, or tell us they think you can only collect para or Social Security. You can't collect both. Now, in general, that's not true, because if you have worked at least 10 years or what Social Security considers 40 credits, then you would have earned a worker benefit through Social Security, and you will receive something for that worker benefit. Now, it may be reduced because of the time that you worked in para, and so that's something that you can contact Social Security to get more information about. We don't administer the Social Security benefit, but a couple of things to know. If you just got really nervous because you have a lot of time in Social Security, the more time you have in Social Security, the lower the reduction typically is. So if you have 30 or more years of substantial earnings in Social Security, there would be no WEP reduction. The WEP reduction is it refers to windfall elimination provision. That's the reduction that Social Security applies to their benefit because of your time in para. Another thing to know, the para benefit is more than twice as valuable for the same amount of time worked and contributions paid. So if you compare 20 years in a para job to 20 years in a Social Security job with exactly the same salary, the para benefit is more than twice as much. So even though you may lose a portion of your Social Security, in almost all cases, people who have para and Social Security are better off than people who have just Social Security, even though there may be a reduction to that Social Security. You can contact Social Security at ssa.gov to get more information about that benefit. All right, and I mentioned purchasing service credit is another way that you can add value to your pension income. If you purchase, basically the way that purchasing works, I don't love the name because it doesn't work like a real purchase. You have to pay money, but the money that you use to purchase service credit, I get to use my air quotes, if you're purchasing service credit, the money you use to cover that cost, it actually goes into your para member account. And every single dollar that you put into your para member account is always going to come back to you. Para doesn't charge you fees in that account. They do not keep any of that money ever. Even if you were to pass away, that money would go to your survivors. So if you're purchasing service credit, you're actually, I mean, think of it like this. You're adding additional para time by putting extra money into your para member account to cover the increased liability of a larger benefit. So that money is going to come back to you. Essentially, it's just like investing your money in a different way to, in some cases, be able to retire sooner, and in all cases, to be able to retire with a higher income from para. Just to give you an example, I had 2 years that I worked at McDonald's in high school, and I also worked for a private school for 8 years that was not para covered. And I was able to purchase 2 years of McDonald's time in para. So I was able to cover my McDonald's work time with para benefits, and also 2.5 years of that private school time. So that's what it looks like to purchase service credit. It typically is not cheap. There will be a sticker shock on this. And the reason for that is not because para is making a big profit off of this. Another reason why I don't think it should be called a purchase, because para actually makes no gains from purchases. The reason that it costs a lot of money in most cases is because when you're working each month, you're earning a month of service credit with para. But when you purchase, sorry, let me start over. When you work each month, you're getting service credit from para. You're currently making a contribution of 10.5%. Your employer is actually making a contribution of 20.95%. So they're paying almost twice as much as you. They're covering 2/3 of this benefit. So when you purchase service credit, the reason it can tend to be fairly expensive is that your employer is not participating in that purchase in most cases. Okay, if you want more information about purchasing service credit, we have webinars, and this resource page has, let me see here, the webinar link, and I can go ahead and put this in the chat, but if you just go to the resources page, you can find our webinars. Let me go ahead and copy this link in for you once I find it. Okay, Paracare webinar. Purchasing service credit, where is the purchasing? Okay, well, anyway, I'm not sure where that link is. I'll find it eventually. If you're interested in purchasing service credit, you can attend that webinar. You can also apply. There's the application online through the link that I provided in the chat. And I can do that again here just to make sure everybody still has it. Okay, there's that resource link again. All right, let's keep going. There are another place that you may be able to draw income for retirement to create that budget is income from a 401k, 457, 403b, or IRA. And so if you are planning to take money from one of those, the most important piece here is not necessarily that you create or fill out any applications to do this, but just figure out the process to get money out. Some people may be choosing to use that 401k or other investment account money for monthly income. You might want a monthly distribution. Maybe your para benefit and your Social Security covers 90% of your retirement income needs, and you're just going to take 10% out of your 401k. In most cases, and certainly with para's 401k and 457, you have the option to get monthly disbursements sent to you. You can also just use it as needed. So if you have a large expense, major expenses like medical bills, home remodels, repairs, car purchase, things like that, you can request money as needed, and you can also just let it grow. You're not required to touch the money in those accounts until age 72 currently. And I've heard rumors that that might even be going up to age 75 in the near future. So you also have the option to just let it ride and not use that money at all, continue to earn returns. All right. And then on the other side of the budget, there are some expenses that you probably should plan for and do a little bit of prepping for. One of them is healthcare, and it's a good idea to study healthcare options. Para offers healthcare options for both pre-Medicare, and also once you get to Medicare eligibility, you have 2 different options. And Para provides a subsidy that covers a portion of your monthly health insurance premiums if you use Paracare. Now, there are tons of other options out there available to you, but I would say definitely do your research. We offer webinars for Paracare, and both for pre-Medicare and Medicare, we offer them 3 times a month. So you can attend one of those to get more information about our health insurance options. But again, I strongly encourage that you do research outside of this. This is just one option for retirement healthcare, and you might be able to find cheaper stuff outside that has equally good coverage. All right, and one final thing is discuss your benefit calculations, your final benefits with your employer. If you're planning to leave, you can find out things like, when is the last date I'm covered on my insurance? How long does my life insurance last? Do I have the option to continue my life insurance? COBRA coverage. Health insurance in retirement is so expensive that for many people, COBRA coverage might be the best option. And what COBRA coverage is, if you're not familiar, you're going to get to use the same insurance that you have through your employer, the same policy, and continue that for up to 18 months in most cases. Now, the catch here is that your employer is not going to pay their portion anymore. So you're going to pay your portion plus your employer's portion plus a 2% administrative cost. But in some cases, COBRA is still the best option for you, especially if you've already paid a large portion of your deductible for the year, for the calendar year that you are retiring. Then any unused leave, it's a good idea to just figure out how that pays out, how you want it to pay out. In some cases, you can roll that into a savings account. And in some cases, you will get para credit, para service credit for the time that's paid out. And that's another thing that you can work out with your your employer's HR and benefits office. All right, so just to refresh what we just talked about, get a benefit estimate from para, figure out how much you can expect from Social Security. If you are planning on purchasing service credit, if that's something that you are already in the process of doing, or if you're thinking about doing that before you retire, you do have to do that. You have to complete the purchase. It has to be completely paid off before your effective date of retirement with para. There's a reason for that. You have to be an active member to purchase service credit. And as soon as you become a retiree, you are no longer an active member. So para will have to cancel that purchase agreement if you haven't paid it off. They will refund all of your money minus any interest you've paid, but just make sure that you have those taken care of before you get to your date of retirement. Studying healthcare, both Paracare and everything outside of Paracare, look at all of your options. And you may be 3 or 4 years away from retirement. If that's you, it may be too early to actually start comparing plans, but you definitely want to at least look at the cost so you have an idea of how to budget for healthcare in retirement. Tax deferred plans, 401k, IRA, 457, 403b. Contact those companies, make sure you know how to get the money out. If you're planning to use it for monthly income, make sure you know the process to get that. And then finally, check with your personnel office to make sure that you know their process and how things work on their side. All right, before we move into, just real quick, reading the question in the chat. Okay, how do we request the benefit estimate on the para website? Let me just see real quick here. Usually we'll have people call in. Let me see. Yeah, just call customer service is probably the easiest way to do that, because there used to be a form on the website, and that form, they just refreshed the website in the last couple months. It's a different look, and they did a lot of changes, and so that form is no longer available. So you can actually do that by just calling our customer service number. It's 1-800. Let me go ahead and put that in the chat.
And Brett, does that answer your question that you had early on? Is that what you're waiting for also? Okay, thank you.
Okay. That's our customer service number there. All right, before we move into the forms that you need to fill out to retire with para, I just want to let you know you always have the option to take the balance of your account out. That is your money. If you're retirement eligible, you'll get a 100% match of the money in your account. Just keep in mind, you can't do both. You can either take the lifetime monthly benefit, or you can take a lump sum refund of the money in the account. Typically, people get more by taking the monthly lifetime income, because when you look at the cash out value, it looks like a lot. I can even see my cash out value right now on my account, and it looks like a lot of money, but it typically only represents about, someone's off mute. So it typically only represents about 10 years worth of retirement income. So taking the retirement income, if you live at least 10 years in retirement, which we're all hoping for, then you come out ahead using that monthly lifetime benefit rather than the refund amount. Okay, so there are 4 forms that we're going to talk about for para, and there is one form that your employer will fill out. They already know they need to do that, so you don't have to message them or email them and say, hey, I need you to fill out this form. In fact, they're not able to fill out that form until after you have actually left employment. So they know that they have to fill it out. It is a process that they're familiar with because a lot of people retire every year and they've done many of these forms before. But if you have any questions about the form, you can ask them about that. We'll get to that a little bit later on. You can start submitting forms 60 to 90 days before your effective date of retirement. So what is your effective date of retirement? Well, it is always going to be the first day of the month after your last physical day on the job. Today is the last day of April. So if my last day was today, because I had to come and watch this this video or this webinar, my effective date of retirement would actually be tomorrow. But if I work on Monday, May 2nd, my effective date of retirement cannot be until June 1st. It is always going to be the first day of the month after your last physical day with your employer. And physical day with your employer includes working from home. So if you're working from home, that doesn't mean you're not on the job. It means you're still employed, you're still on the job. So it's always the first day of the month after your last physical day. Now, I want to talk real quick here about the retirement application. Actually, it won't be real quick. This is probably the most complicated piece. It's not that complicated, but it's the most important piece and it's the most detailed piece. So we're going to spend a little bit of time talking about that. Give me one second here. Okay, so anticipated retirement date. Notice there's a 1 in there. There's a reason there's a 1 in there. That 1, it's because everybody's retirement date is always on the first day of the month after the last physical day on the job. Now, the cool thing, if you fill this retirement application out online, there are only 3 things that you have to fill in because you have to log into your member account. Para already knows who you are. They already know all of your personal information, your address, your email, all of that stuff. They know your employer, they know your position, and so that stuff is all going to auto-populate. The only thing you have to fill out is your expected retirement date. And then for that, you just have to put in a month and a year. And then there are 2 different types of beneficiaries that you would want to select on this form, or that you may want to select on this form. Now, before we jump into selecting those beneficiaries, I want to talk about the vocabulary. I want to define what the difference is between the 2 different beneficiary types. So we have named beneficiaries. You can have more than 1. It can be a trust. It can be a charity. You can have your named beneficiaries. There's a lot of flexibility in named beneficiaries. Named beneficiaries only would receive lump sum balances left in your account that you paid in. So if you paid money into your account, it's in there. If you retire and you don't use up all of that money before you die, then anything that's left in your account would go to your named beneficiaries with a 100% match in most cases. The co-beneficiary, on the other hand, it is just one person, is singular. It can only be one person, but it can be any person in the whole world. So this one person is going to share your lifetime income. So whoever lives longer is going to get the para benefit, even if that other person you select is not a para member. They're going to get para benefits as long as they live, even after you die. So the way that that works, there are 3 options. Option 1, you would not choose a co-beneficiary. You would still choose named beneficiaries. You would still choose named beneficiaries because the named beneficiaries are the people that are going to receive money if you pass away and there's still money left in your account. Option 1 pays the most. Oops, I lost my presentation. Is it gone? Okay, sorry about that.
Yeah, it's gone. Try sharing again. I'm not sure what happened.
Okay, I reshared. So option 1 pays you the most. It pays you for as long as you live. And if you're choosing option 1, it's called a single life benefit because after you pass away, that is the end of the benefit. The only way anybody else is getting any money from para after you pass away is if there is still money left in your para member account. Now, option 2 and option 3 are joint life benefits. You get to share your benefit with exactly one other human person. So under option 2, there is a reduction from option 1 to cover the extra liability of adding another person. After you pass away, under option 2, your co-beneficiary receives half of your para income for as long as they live. Under option 3, there's a further reduction from option 1. Again, it's a joint life benefit, so that one special human person will receive 100% under option 3 for as long as they live after you pass away. Essentially, they become the para member because they have access to Paracare, our retirement health care. They also get your Paracare subsidy. They'll get your annual increases. They just continue on as the para member after you pass away. So you might be thinking, well, what happens if I die, or what happens if they die before I do? How much is the reduction? All of those questions I will answer. Okay, so another question here. I just want to address this one real quick. Can your option choice be changed after retirement? We'll talk about that in a couple slides. In very limited cases, you can change your option, and we'll talk about what those cases would be. So this, we're back to the benefit estimate again, and I want to take an opportunity here to highlight a few different things than I highlighted the last time. In your benefit estimate, it's going to show you the birth date of your co-beneficiary. So you can select one co-beneficiary, put their birth date down, and they will base your option 2. Oops, I didn't highlight that very well. They will highlight they will share your option 2 and option 3 payment amounts based on the age of your co-beneficiary. So the younger your co-beneficiary is, the more this reduction would be. You'll notice in this case, this person who has 6.5 years of service credit with a $5,000 highest average salary at age 67 is going to receive $800 per month as their option 1 benefit amount. If they choose option 2 to cover their co-beneficiary for 50%, that would drop down to $77. It's a reduction of about $52 per month to make sure that that other person has income even if you pass away. Now, you can see here the co-beneficiary would get half. So in this case, $389, but this will increase over time with the annual increase. So that number would only kick in if you passed away in the first 3 years of retirement before you started receiving annual increases. And then finally, option 3, another reduction down about another $52. Oh, sorry, the first one was $46 down. This one is $52. And you could see that your co-beneficiary receives exactly the same amount as you after you pass away. So the reductions there, you can play around with this on our calculator on the website. You can see, and you can also change your co-beneficiary on that calculator as well. Okay, a good question, Darlene, and let me address that in just a second. Go ahead and clear this and we'll move into the caveats. When can you change? What opportunities do you have to change your co-beneficiary? And then I'll answer that question there. Okay, so you can cancel your retirement all the way up until the time you have received your first payment, which sometimes is not the first month of retirement. The way that it typically works, you retire. After you leave employment, your employer submits your final paperwork to PARA in that 6-month salary report. But in some cases, because of the process time there, they have to audit your account, then PARA has to audit your account. And so sometimes it can take longer than a month. And if all of that stuff can't be completed before typically the 20th of the month, then your first retirement check won't come in that first month, but you'll still get the check for that month. You would just receive 2 checks in the second month of retirement in most cases. So typically we will always receive a check for the first month, but it might not come until the second month. It might come along with the second month payment. Now, until you receive that first payment, you can cancel retirement, say, just kidding, I want to go back to work. So you basically get a 60-day or 30 to 60-day trial period to see if this is what you wanted, or to mull over the decision and cancel that retirement. Once you get your first retirement income from para, you are locked into retirement, but you can change your option still for another 60 days. So you have basically another 2 months to reconsider, look at the value or look at your budget and say, hey, should I have chosen option 2 instead of option 3? And you can change your option or your co-beneficiary at any time in that first 60 days after you receive a paycheck. After that, you are locked in. This is a strong binding legal agreement that you are covering one other person with your lifetime benefit. You get to share that benefit with someone else after you pass away. The only caveats here is if you are married and you choose option 2 or 3 and your co-beneficiary passes away before you do, that would only be if it was your spouse. Then you can select a new spouse as a co-beneficiary under option 2 or 3. You have a 60-day window there. So if your spouse passes away, then later on in retirement, you get remarried, you're allowed to select your new spouse in the first 60 days after your marriage or civil union. By the way, when your co-beneficiary passes away, it doesn't matter who that person is, you go back to option 1. So you begin receiving the maximum benefit amount again. It's just that if it's your spouse, then you would be able to select a new spouse if you got married again. Now, if you are unmarried at the time you retire and you choose option 1, that means you do not select a co-beneficiary, then if you get married later on in retirement, you can select a co-beneficiary and that person as your co-beneficiary under option 2 or 3. And there is one final exception. If you would like to provide co-beneficiary benefits for an adult disabled child, it has to be your child, then you have the option to set up a supplemental needs trust. So what I said earlier is it has to be a human person, but only in one case, you have the option to set up a supplemental needs trust in your child's name if they are disabled. Now, the reason that para does that is because in some cases, your child may be receiving assistance from state or federal programs, and oftentimes those have an income requirement. You can't earn over a certain amount. If they start receiving your para income, it might disqualify them from some of those programs. We don't want that to happen. So if you're thinking about covering a disabled child as your co-beneficiary, then contact para and they can walk you through the process of setting up that supplemental needs trust. In all other cases, and to answer the question of Barbara, yes, a child can be your co-beneficiary, but it has to be a human. It can be any human. It could even be me. If you want to pick me, I'm here. But yes, let's see. There are a couple other questions. Can you choose? Oh, also same question. Can you choose a child as a co-beneficiary? Yes. Just keep in mind, the age of the co-beneficiary matters in the amount of the reduction. So if you choose someone who's 5 years old, that creates a really big liability for para, because para has to pay them probably until they're 90, at least, considering increasing life expectancy and medical science and things like that. Okay, another really great clarification here. If your child is your co-beneficiary and they pass away, can you repick? No, it's only if it's your spouse and your spouse passes away. Now, there is a question that often comes up, can you change your co-beneficiary if you get divorced? And the answer is only if a judge orders it. So para will respect a court order if someone to remove someone as a co-beneficiary. Otherwise, you are not allowed to change your co-beneficiary for any reason, including divorce, unless there's a court order that says that person. Para does respect court orders. All right. Okay, I hit the mute button. All right, so let's go ahead and answer that other question. If you're 61 and you, with 18 years of service, can you leave para service and wait to collect? So the answer is yes. The answer is yes. But the answer also may be you might not want to. And because the reason for that is because if you can collect for a couple of years, take that money, the time that it takes to get that money back, because you have 2-year head start, and the difference may not be a lot. And we can take a look at the HAS table in a little bit, and we can talk a little bit more about if you left work, you can always wait and retire later, but it's not always to your advantage to wait until later. Certainly once you hit full retirement, which is the non-shaded white part of the table, the HAS table, that's when you want to retire as soon as you can at that point, because after that, your benefit is not increasing. You're just leaving money on the table. All right. Okay, I think I just answered that one. If you leave employment at age 65, can you wait, or 55, can you wait until 65 to retire with para? And the answer is yes. It may not always be to your benefit, but you can. Let's see. We'll get to working after retirement a little bit later. What is the restriction on working after retirement? We'll get to that a little bit later. Can you show that table? Let me get through the forms and then we'll get to that table. Okay. So that's the end of the retirement application form. It's the only form that's actually required. And so we're going to talk about 3 more forms here that are not required, but highly recommended. This one is electronic funds transfer. It makes it easy. You probably all have electronic funds transfer from your employer now directly into your checking account. It means you don't have to wait by your mailbox and then figure out how you want to deposit your checks and things like that. So you could fill this out, submit it with your retirement application as much as 90 days before your effective date of retirement. Taxes. In almost all cases, the money in your retirement account is pre-tax. You have not yet paid taxes because it came out pre-tax. And so when you retire and you're taking a monthly income from para, it will be taxed. The reason this form is optional is because para has a default, not because you don't have to pay federal taxes. If you do not fill out this form, para will automatically withhold 20%. Wrong answer. Para will automatically withhold taxes at a rate that is married with 3 allowances. So if that's the default, they use that as that. That may not be accurate for you. It may be too much. It may not be enough. And so you want to probably just fill out this form. You can also fill this out for state taxes, but only if you live in the state of Colorado. When you retire, if you're planning to move outside of Colorado, then you will have to handle your state taxes separately because para does not withhold taxes for other states, only the state of Colorado. One cool thing about staying in Colorado, there is something called a pension income exclusion for the state taxes. This is something you can elect on your tax form. It's on the para tax form. And the pension income exclusion excludes the first $20,000 for people age 55 to 65. Once you turn $65, you get to exclude the first $24,000 of your retirement income. And it's not just para income, it's all retirement classified income. So that would be 401k, other pensions, Social Security, things like that. You don't have to pay Colorado state taxes on the first $20,000 or $24,000. If you're choosing ParaCare, you can submit your ParaCare enrollment form. Oftentimes people retire and they still have healthcare benefits all the way through the summer, all the way maybe even through August 31st. And so you may be able to retire June 1st and keep your benefits, your healthcare all the way through August. So you can fill out this ParaCare enrollment form and have an effective date of September 1 if you have benefits through August. So you can submit it 90 days before your retirement, even if you don't need coverage until 90 days after your retirement. All right, so just to summarize again, retirement application is required. You're going to choose 3 things: your retirement date, a co-beneficiary if you want option 2 or 3, and a named beneficiary regardless of what option you're going to choose. And then you have direct deposit, tax withholding, and ParaCare enrollment form. And as I mentioned before, your employer is going to submit that 6-month salary report. They do it very timely, as quickly as they can. But in some cases, your first retirement check may be delayed until the 2nd month where you will get 2. All right, so we have this after retirement, but first I promised I would talk about the table, because the table often helps a lot of people. Not everybody benefits from the table, but a lot of people do. So I think I need to change my share here. And while we're on the website, I'll just take you to the home on the website here. This is the home page. I'll show you where to find a few things here. This is the members tab. And so once you get to retirement, you'll probably use the retirement tab for most things. But the members tab is where you're going to find most everything up until retirement. And benefit basics is where you can find your table, but you actually also can find your table. It's right under your name when you log into your para member account. So you look, your name's right there and it says, welcome Matthew Whipple, you're in the defined benefit and you will be calculated based on table 2. The benefit basic also has a link to all the highest average salary tables. And for this, you'll have to use your start date if you don't want to log in and get it that way. So let's go ahead and take a look at para table 6. I think a lot of people are probably on para table 6. Although if you have 18 years, you're likely on para table 2. Okay, so let me grab my annotation tool again. Let's look at across the top of this, you're going to see your years of retirement, years of age, sorry. Down this column on the left, you're going to see how many years of service credit you have. If you are someone that has 55 or is 55 years old, and let's say you have 18 years of service credit, that puts you right here. You are not eligible for retirement yet, so no benefits eligible. If you keep working, you're moving in the direction of retirement eligibility like this. So you would be moving diagonally and you would hit retirement eligibility somewhere about there. You can continue working and you would hit full service retirement. The green area is early or reduced retirement. You would hit full service retirement in this table at age 61. Now, there was a specific question earlier about what if can I leave at 55 and wait until I'm 65 to retire? So let's go ahead and address that question. If you stopped working at 55 and let's say that you had 20 years of service credit, that puts you on this table, and actually all of our tables, it would put you in reduced retirement. And that means you're getting a lower percentage for each year of service credit. Now you can wait. If you continue waiting, you can see that the amount, these are all percentages of your highest average salary. The percent would increase from 32%, 32.6, all the way up to 50%. Now the question here is, how much is that 32% over 10 years worth? If you are planning to leave employment and wait until 65 to retire, but still work somewhere else, you might just take that benefit and put it into a retirement savings account. A lot of people will do that rather than just waiting for the 50% because you can actually make that money work. Now, I'm not giving any advice. I'm not telling anybody what you should do. Your benefit will increase if you wait until age 60 in this case, all the way up to 50%. So you really kind of have to crunch some numbers here, figure out whether that's more valuable or whether taking the monthly income and saving it, investing it, whether that would be a better option for you. I don't know the right answer, but probably the best answer is the one that provides the most income and security for your retirement. And I can't really answer that for everybody. Now, one more thing I want to show you, I mentioned this earlier, so I want to mention what I was talking about here. If you, let's say that you were 50 or you had 55 years old, but you had 25 years of service credit, that would put you here. And if you keep working, or sorry, if you stopped working but waited, you can see that this stops increasing when you hit full service retirement. So at age 60, you would not want to continue waiting because notice this does not increase between age 60 and 65. That's where you're leaving money on the table. And so you would want to collect as soon as you hit full service retirement. Are there any things that I can clarify about the table before I move on? Can you say where these charts are? Let me just give you, and by the way, for this, to find your table, the best way to find it is to log into your account. It's right below your name. And if you haven't logged into your account before, I highly, highly, highly recommend, because that's where all the forms are anyway. The calculators are all there. And so if you log into your paramember account, your table will be right there. If you don't want to log into your account, you can find the tables here on our main page. I'll just put the link in the chat here, but you're going to have to know your start date in order to find which table is yours. There you go. Okay. I see. Let's see. Are there some questions? Years of service credit are only for Colorado para. Yes, that is true. So we don't count service credit in other state pensions that were not Colorado. Let's see. I have worked for Denver Public Schools almost 30 years and believe there is a different retirement table for those. Yes, that is absolutely true. So if you're in Denver Public Schools, there is a different retirement table. It works fairly similarly. The one difference between the para retirement table and the Denver Public Schools retirement table is that you cannot wait and get onto the table by waiting. You will be eligible at age 65, but you can't age into early retirement. You can only age into full service retirement on the Denver Public Schools table. So other than that, they work the same. All right. What did you just say about full service retirement? Okay, so on the table, full service retirement is the part that is not shaded. It's this part, once you get past the green area into the white area. And the full service retirement pays the most. It's 2.5% for each year of service credit. So if you're looking here, everybody reaches, ooh, that's not an arrow. I wanted an arrow. Everybody reaches full service retirement at age 65, regardless of what table you're on. But other tables, this table here has a rule of 85, I believe. You can see this right here is the line that represents full service retirement. So if you have 30 years at age 55, you're in full service retirement, and so on. And it just pays the highest percentage. All right, for time's sake, I'm going to get back to our presentation. You're saying it is not below your name. Okay, so then you're looking on the name on your account, and it says welcome, and right below that there should be a line that says you are in the defined benefit and your benefit will be calculated based on table X, Y, or Z.
Yeah, sorry. It just says like active status, which I found it from your link, but
okay.
Like, I don't know if other people are seeing that, but right below my name, it says status, active member, para membership began on or before, but it doesn't say the chart.
Interesting. Okay. Do you have less than 5 years?
No, I'm on or before the 2005, so I'm on the chart too.
Okay, it's interesting. When I log in, I'm also on chart 2, and it says that there. So, well, I'm sorry. I hope that's just a glitch and not something that I don't know about. Okay. There's a lot of questions coming in here, but I got to keep going with the presentation just so we have time to get through. And if we have time, we'll get back to those questions. All right, so annual increase, you do get a pay increase in retirement. Now, this is a design to help you keep up with inflation, but currently it's only 1.25% actually. So it's not going to keep up with inflation in most years. So even though you do get a pay increase through para, and this can go up or down, it's actually going down to 1% in July, but it can go both directions. It can go all the way up to 2% or all the way down to 0.5%. And so this is not a solution to inflation. You may want to have another plan to account for inflation. And what I mean by that, the increase in cost of goods and services. Over time, things tend to cost more. And that's just a simple thing that happens with our economy. The cost of goods and services goes up, just like your salary goes up over time in general. And when we look at inflation, the average over the last 10 years was 2.9%. Now, if you take 2.9% inflation and you run that for 25 years, it actually doubles the cost of goods and services. So in 25 years into retirement, if you retire at age 60 and you live to 85, which is our current life expectancy, you should expect to have to pay twice as much for groceries, gas, cars, things like that. Almost everything is going to be twice as much in 25 years because of inflation. So it's something to plan for. If you have an extra savings account like a 401k, you can give yourself pay raises out of that when you start to feel the squeeze of inflation. Some people choose to work an extra job so that they can save extra money so that they can, when inflation starts to hit harder later on, they don't have to work, those types of things. But yeah, working part-time, you can do that. And here are the rules. We're going to talk a little bit about that. Someone asked about what are the rules. So just real basically, if you retire and you want to go back to work for a para-employer, these are the rules. If you want to retire and work for anybody else, anybody that is not a para-employer, you can work as much as you want. There is no limit. And para is not interested in any information about employment outside of para. It's just if you work for a para-employer. So the rules are these. You have to not work on the first day of retirement or the first working day of your retirement month. Those are federal regulations. Every day that you work in the first month is a 5% penalty of your benefit. So probably just avoid that first month altogether to make sure you don't get penalized. Once you come back, you have 110 days per calendar year. Oftentimes people use this as a transition year, and that transition year works like this. You would retire perhaps June 1st. If your last day was in May, it would be June 1st. If your last day is in June, it would be July 1st. Then you would wait out the month. You would come back. You could work the fall semester. And during that fall semester, you would probably only use up about 90 days of that 110. But then January comes, the calendar resets, and it starts over. So you get 110 days from January 1st. So typically people can work the spring semester as well. Once you get done with that spring semester, you probably have a few more days that you could do something like substitute, work part-time, things like that. But keep in mind, any day that you go over 110, there's a 5% penalty of your benefit. So typically people use that transition year to build up their nest egg. So if you find yourself later in your career and you don't have as much money in your 401k as you wish you did, that's a great opportunity because you're going to have a year with two incomes, one from para and one from your employer. Another thing to keep in mind, you are going to make contributions still. You still have to make para contributions, but it does not increase your para income because you're already retired. That money goes to pay future benefits for you. Then another thing to know, your employer is the one responsible for hiring you. They are the one that you have to work this out with. This is not a deal that you work out with para. You don't contact para and say, hey, I want to work a 110 or a transition year. This is something you have to be actually rehired by your employer because there has to be a separation between you and your employer. And then once you are separated from your employer, they have to hire you back. And they may hire you back on a different contract than what you are currently working. So all of those details you have to work out with your employer in order to be able to do that. Were there any questions about that specifically? Okay, and if you are in a rural school district with in areas of critical shortage, this is a good clarification. You are allowed to work unlimited. If you are a teacher, school bus driver, or food service worker, those positions you can work unlimited. Also, even if you're not in a rural school district, you can substitute unlimited number of days in any school district in the state. That is a very recent change. It happened in legislation this year that you are actually allowed to substitute in any school district in the state for an unlimited number of days. So either you can work in a rural school district unlimited amount, or you can work as a substitute in any district. Now, keep in mind, this program is constantly being reevaluated. The design of the program was to help with areas of critical shortage. Mostly it would be like teachers and bus drivers and food service workers. And they're not really sure that it's helping as much as they hoped. They did continue this through 2025, but the rules can change. So pay attention to the rules if you are planning to work after retirement. If you're planning to do work at a rural school district, there is a limit of 6 years that you can do that in most cases. So,
Matt, we're at our 5-minute warning.
Okay, thank you so much. We just have one more slide here, action steps for you. So review the resource page. There's a lot of good stuff in the resource page. I can post that again. Actually, I don't have it up. I'll just get it again. So review that resource page, get a benefit estimate from para by calling our customer service number. And once you get that benefit estimate, then you can contact Social Security about your benefit estimate from them. They may want to know the information about your para benefit before they give you an accurate benefit for your Social Security. There we go. I'm going to put this in the chat again. That is the resource page. Insurance options. So basically the next 3 bullets here: retirement health insurance. Talking to your employer, you can get information about COBRA, so that has to do with retirement healthcare as well, and attending a PCI, which stands for Paracare Information Meeting. That's our healthcare plan. When you get to the eligibility for Social Security, or maybe slightly before, you can contact them to figure out what you can expect from Social Security, and then submit your paperwork 60 to 90 days before retirement. All right, I have a little bit of time, I guess, to answer some questions, or do we want to wrap up now? It's 11:50.
We have 5 minutes to do questions.
Okay, so why is the calculator service credit so wacky? Seems like it should be cut and dry. Mine was the same for 20 years. Then it changed. I had an audit that didn't work in my favor. Now it has changed again in my favor. Oh my goodness, great question, Bo. This is really important. This just changed. It's going to take a little bit of time, so buckle up here. In the school districts, all school districts, para has changed the calculation format because previously we have 600,000 members and almost 300,000 of them are eligible for something called a non-12 calculation. Previous to this year, our benefits team had to go through and manually calculate. So you said you asked for an audit, you got the audit, it didn't help you, now it's helping you. What you're looking at when you see your service credit is you're actually looking at a different way of calculating. So what's happened, the reason that they changed this is because people who work in school districts on a 9 or 10-month contract that do not work in the summer will automatically receive 12 months of service credit. They'll take the 10 months of income and they'll spread it across the 12 months. Now, the way that this is set up to calculate, every single month of the school year, every person in the district is going to receive 1.5 months of service credit for each month. So track with me here. Once you get to 12 months, you cannot have more than 12 months in a school year or in any 12-month period. So if they're giving you 1.5 months every single month that you work, by the time you get to 8 months, you will already have 12 months of service credit. That's typically in April or May. So by now, every single person on this call, if you're an active school district worker, you already have 12 months of service credit for the school year of 2021-2022. Even though you're still going to be making, getting paid and making contributions over the next 3 to 4 months, you already have the 12 months of service credit for the year. They did that so that they don't have to audit every single person's account to make sure it's accurate. So what you're going to see is probably for the next 3 or 4 months, your service credit will not change. Your service credit will most likely stay the same for the next 3 months because you already got credit for the whole 12-month school year of 21-22. Does that make sense? This one always makes me nervous because it's complicated. So what you're going to see, if you log in right now, you're going to see a jump in service credit because you're getting that in advance. Essentially, they're giving you advanced service credit. Now, the next 3 to 4 months, because you already have 12 months of service credit starting in August of last year, you will not get additional service credit for May, June, and July. All right.
Okay, I think our time is up, Matt. Can they email you directly? Any more questions?
Email me directly. Actually, it's not a good idea to do that. Number one, because I can't see your personal account. So I'm not someone who's at para that can actually log into the system and see like how many years of service credit, things like that. So the best thing to do is actually call customer service because they have two screens in front of them. They look up your account. They tell you exactly what they're saying. They can answer all of those questions. I actually can only give you general information, which is kind of what I did today. So
Can you put that number back in the chat again for
yep,
everyone?
absolutely.
And Matt, thank you so much for coming today. I see lots of positives coming in the chat, even though there's lots of questions. Lots of people are appreciative of your presentation.
Yeah, and if we can do these, Carissa will be back by the end of May, and if you want to schedule more of these, she can certainly get more of this on the calendar, because I realize there are a lot of questions. So
thank you so much.
Yeah,
All
you're
right.
welcome.
If you'll stop sharing your screen.
Yep. Have a good day, everybody.
Thank you, Matt. All right, as we wrap up our last couple minutes, I'm going to invite Lori Goldstein back to wrap up our day, and I will be putting in the chat box the link again. And after she shares, I will leave up the screen that gives you all those little lines that you have to put those particulars in. So Lori, you are on.
May I ask one quick question? Because I'm just new to all of this. What is the difference between NTA and CEA? NTA is just life insurance, right? And CEA is the umbrella for all of this?
Yes. Colorado Education Association is your union.
Right.
NTA is a private company that sells life insurance and some of those medical insurance benefits that they were sharing.
And then what about NEA?
That's the National Education Association. That is the biggest umbrella over all of us.
So if I join CEA, I'm a member of NEA?
Yes, that $500 price joins you in both NEA and CEA, and you must join both.
And is para part of CEA, or is that something separate?
It is something separate.
Okay, thank you. My first year, thank you.
No problem.
Well, that was a bit overwhelming, and I'm sure that you probably have tons more questions than you had when we started. I am going to put my email in the chat. Feel free to reach out to me if you do have any questions from this presentation, and I'll figure out where to get you to find your answers. You know, it's the end of the school year. I just want to hope all of you have a good end of the school year and a good break this summer. And someday we'll see you in the CEA Retired.
That's right. All right, I'm going to go ahead and share my screen. Thank you, Lori. This will stay up for you as you log off. If you have any other questions, you feel free to stay on as others leave the webinar. Join today to get that $25 off. All
I have
right.
a quick question.
Yeah, is there anyone who needs me to keep this up? I would like to stop sharing it. Okay, taking it off. Go ahead.
Would it be best to call customer service related to pre or post tax if I am like 5 years out, so that para can see my total income?
Pre or post tax about what in particular?
Well, everyone always talks about pre and post tax. So is that all on the additional items that you purchase, say, on your benefit package, or is it all inclusive to your income, on your net income or your gross income? Because I'm just wondering what I should do. since benefits are like due today or tomorrow?
Are you talking about joining retired group as a pre-retired member?
Not yet, no. I'm like looking at like 5 years. I can't afford to do the pre-retirement right
Okay.
now financially because I'm a para. Yeah. So and I understand it's like $280, right? For the lifetime or what have you.
For ESP.
Okay. So what's the best to do if I'm like 5 years out?
So I would really encourage you to somehow be able to buy that in the next 5 years, because as we keep sharing with you, the lifetime membership is going up.
Right.
And when you join your union, you're still an active member of which local, Sylvia?
Oh, I'm BVPA, Boulder Valley.
Right. They take your dues post taxes. In other words, you're taxed on the amount that they're taking out. So what para sees is what you actually make.
Oh, okay. So I don't need to really change anything then right now.
That would be my guess. I don't know your particulars, but that would be my guess.
Okay. Well, I appreciate that very much. Thank you so much for your time.
You're welcome, Sylvia.
Have a good night.
Jennifer, just to clarify, 500 is a one-time full-time membership with no more costs. Yes, that is true. That is why it's lifetime. You're done, one and done. And today we're saving you money because it's going up in the fall. That lifetime price will be higher next time in the fall. So we're trying to save you money by getting you to join now, pre-retired or full retired.
Oh, I misunderstood that. So I thought that was, you'd be in for lifetime, but yeah, you'd still be paying dues.
Nope.
At a price. No, that's it.
Nope. 500 gets you done, one and done.
Cool. Thank you.
Yeah. And Brett, I shared just on that one trip that I booked next May in 2 weeks, I'm going to Indianapolis and needed to set a reservation for a car rental. And I looked on member benefits. I'm like, what can member benefits get me on savings? And then I compared to outside of member benefits, what's the general public getting? And I'm saving $600 just on a car rental next month. That pays for my lifetime dues. Done. Plus all the other benefits that we've shared with you today.
And Brett, when you retire, you would contact CEA and say, please change my active membership to my retired membership that I have. And it's seamless. You're done. There's no extra cost at that time because you've already joined as a pre-retired member.
I see. Now my status has changed somewhat because I'm what's called an integrated learning specialist. So now I'm partially admin and partially teacher. And I don't know if I'm technically in the teachers union anymore, but I could still be in the CEA.
Right. If you belong to CEA and NEA, you're still an active member. You just may not belong to the local. And lots of locals do that once you join the admin side. Any other questions for us? We see a lot of faces still here.
Can I ask a question? So if I'm a local member, that's also covering my CEA, NEA dues as well?
So Darlene, are you still an active educator?
Yes.
So when you pay your dues to your local, they go ahead and forward on your dues to CEA and NEA. So that is taken care of as an active member. When you join today with the pre-retired of what we're talking about, it's going directly to CEA that pays NEA for you.
But my monthly dues still won't change with my local.
Your monthly dues will not change until you retire. And once you retire, you stop paying active educator dues, which are ongoing. And if you signed up today, then you would move to the retirement that you've already paid, and you don't have to pay any more dues for the rest of your life. And you get all these benefits.
That for CEA and NEA, but
Yep.
my monthly contribution to DCTA keeps going, won't change even if I sign up for this.
Yes, they will, it will not change unless, of course, you know, DCTA raises dues or something like that, but that's a separate membership. It is
Right.
the active membership through Denver, and the retired membership here will just sit and wait for you to retire.
Okay, and I have NEA, CEA through my DCTA dues, is that
Yep.
correct? Okay.
Yes.
And
Beautiful.
Darlene, when you retire, you'll have the opportunity to join the DCTA retired group, should you so choose.
Okay, beautiful.
I was just going to add, Darlene, if you look at the slate, right, every Tuesday, to join DCTR should be in the slate right now.
Okay, beautiful. I still have a few years for retirement, but just trying to plan.
Okay.
Yeah,
All
good
right.
for you for being here.
All right.
We'd love
thank
for you to join now and get that price that we're quoting you today.
All right, thanks.
Any more questions that we can help you with?
So,
Lynn.
so at the moment, I'm working on the application, and it's wanting me to put in a payment for monthly dues. Did I do something wrong?
Let me go through it. Can I get back with you?
Yeah.
Okay, let me go through it. If the rest of my team can handle the room, I'll go and check that out.
And if I'm filling out the CEA one, that also covers NEA.
That is correct. The $500 covers NEA retired and CEA retired.
Thank you.
When is this good until just today?
Just today.
Like midnight today? I'm running out of the house now, so I can't do it right now.
For the $25 rebate, yes, but you can join at any time.
Okay, thank you.
The link should be in the chat.
Okay, I have too many. So it's the one that Phyllis just did that says CEA 10. That's the link. That's the link, right?
Yes, that's the link. Lynn, I'm still not seeing what you're talking about partial dues.
You know what? I think I put the wrong things in the that screen that you were showing us.
Okay.
I took a picture of it and it's a little blurry, so I may have
let me share it again.
Oh, that'd be great. Thank you very much. I just feel like I ought to go ahead and do this today because.
Well, we would agree with you.
Carmen, your comment in the chat is correct. The $500 is retired dues. It's completely separate than your active NEA, CEA dues that you pay monthly now.
Uh-oh. I was trying to make it bigger, but I'm not getting any luck.
Let me just write it down. Would you just give me the words in each?
Yes, let me read them to you.
Okay, perfect.
So where it says membership type, you're going to put full-time.
Okay.
Title, retired. Position, you put certified or ESP. Subject, you put pre-retired or retired. Are you doing this as pre-retired?
Yes.
And then on the last one where it says school or work site, you put pre-retired.
Okay. That's what I did wrong. Thank you very
Okay. You're welcome. Any more questions for us?
I don't suppose everybody could put their cameras on for just a second so we could get a nice little picture.
That'd be great. You'll be famous.
Couple more pictures there.
Here comes a couple more.
Couple more. Well. All right. Phyllis, maybe we could go back through the recording and get some screenshots of some full pictures too.
Yeah. The other, okay. All right, if there's no more questions, I'm going to go ahead and log you guys off. Council, if you'll stay on, we can do a quick little debrief. And I'm going to stop the recording now.